DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
You said it, you finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. We're on 4th floor today. We're gonna be on floor 1, and then we're headed straight to the moon, boys.
Hey, why don't you vote yes on BitMiner's shareholder proposal and send this thing higher? What do you say?
Tom Lee is going to send this thing higher. Let's get right into it, guys. We got Mando coming up in a couple minutes. Let's get straight into this, Johnny. Our guy, Tom Lee, is ready to go.
Tom Lee is ready. The guys in DC, they don't know what they're doing, and Tom Lee is going to take over. It's Tom Lee's revenge arc.
Tom Lee needs to get this dub. Where's he at?
Tom Lee is going straight to the big guns, investing $200 million into MrBeast. None other than the man himself, MrBeast. Man, I saw this morning. I did not know what to make of it. I've been wrestling with this all day. I'm still confused. I'm still trying to make sense of why Tom Lee, the largest shareholder of ETH, has invested $200 million into MrBeast. All I've heard is conspiracy theories all day.
Conspiracy theories, really?
Yes.
Wow. I'm bullish. I'm so bullish. Dude, we have to have this vote pass or God knows what's going to happen.
I'm curious. What do you think here? Like,
well, let's get a bit more detail. It's either this tweet or the other one that has a scroller. If it's the other one, let's just pop to the other one. And let's get some more detail on the thread here, because there is some more detail. If not, I can just read it out. Basically, I think we kind of got an opportunity for ETH to get mass adoption here. In terms of mind share. So MrBeast is the #1 content creator in the world. He's central to the lives of Gen Z, millennials, etc. BitMine has targeted 5% of its balance sheet to invest in moonshots. So basically, this sets the stage for a future synergistic collaboration between Fundstrat, which is Tom Lee's company, and BitMiner and MrBeast. The Beast Industries CEO, Jeff Hausenbold, said, "We are excited to welcome Tom Lee and BitMine as new investors in Beast Industries, joining our current top-tier investors. Their support is a strong validation of our vision, strategy, and growth trajectory, and it provides additional capital to achieve our goal to become the most impactful entertainment brand in the world." Man, we look forward to exploring ways to collaborate and incorporate DeFi into our upcoming financial services platform. This first moonshot was 20 million into 8Co, which owns 5% of WorldCoin. So Tom Lee owns a ton of WorldCoin. And now MrBeast with $200 million. So total $220 million invested into these moonshots. The shareholder meeting is live at 4 p.m. Eastern today. This vote is massively important to all ETH holders. I think it's going to go through. I'm bullish on this, and I'm stoked. I think Tom Lee is running an absolutely insane playbook. And if you guys remember, Michael from Framework said that Tom Lee has I think it was a six-figure
$1 billion call position.
Six-figure notional size. So like 100,000 ETH or more in that position. Going to be absolutely insane.
Yeah. Yeah. The strongest take that I've heard on why Tom Lee decided to go into MrBeast Industries is because this is a onboarding flywheel that could take effect and spur customer acquisition for a lot of the DeFi apps on Ethereum and Ethereum in general. Obviously, MrBeast has tremendous distribution, and somehow embedding whether it be digital collectibles, like we saw Reddit and we saw NFTs. MrBeast also has a video game. There's obviously on-chain opportunities when it comes to video games. I tend to think that this is an infrastructure play where MrBeast will continue to launch multiple businesses around his core distribution, and those could live on ETH in some way, shape, or form. Obviously, all of this is very opaque. We don't know exactly how this is going to play out just yet. But if you combine all of the financial opportunity that takes place on ETH with massive distribution in MrBeast, this is a recipe, and you can kind of see how positive effects could come about from this.
Most definitely. Most definitely. Yeah, man. I mean, look, MrBeast is like the epitome of basically creators going viral and going into the biggest like landscape of people. Like, he literally took a YouTube channel and into an Amazon Prime show. Like, it's insane what he's done in the last, couple of years, really. So
it's interesting to just to say on media in the current state of media is absolutely true. Like, MrBeast is going from a permissionless open platform in YouTube, for the most part, permissionless. Obviously, there's some censorship, but then taking that into Amazon. You have multiple podcasts that are following suit and going from YouTube in independent creators that are then getting monetized and getting bought and acquired into an exclusive platform like Netflix, like Spotify, like Hulu. And there's multiple Barstool podcasts are going exclusive on Netflix very soon. Kill Tony's another great podcast that is now on Netflix. So look, this is going to continue to happen. And I think MrBeast is leading the way. And there's going to be creators that continue to diverge and land these exclusive agreements. And I think that's the state of media. I think that's a trend to watch in 2026.
I agree. All right. Shout out to Tom Lee. Good luck today, buddy. Hope you're going to crush it, and wishing you the best. Let's move on from you, Tom Lee. Keep it up, brother. Let's go.
All right. What do we got here?
We got Coinbase opposing the Senate push on crypto rules. Brian Armstrong with a viral tweet. After reviewing the Senate banking draft for the last 48 hours, Coinbase unfortunately cannot support the bill as written. Too many issues: a de facto ban on tokenized equities, DeFi prohibitions, erosion of the CFTC's authority, which of course we do not want that. We want the CFTC to be regulating crypto, not the SEC. And really, guys, I think the biggest one is the draft amendments that would kill rewards on stablecoins, allowing banks to ban their competition. And so I put out a tweet yesterday on this that I thought was particularly prescient, which was basically saying that banks are literally trying to prohibit they're trying to prohibit stable coins from passing on yield to their users. I said that if you are a DeFi power user, you have to be on Brian's side. You want to see this market structure bill get passed before the midterm elections, where it's looking like a Democrat tidal wave and a potential sweep of both the House and the Senate. This would give us far less bargaining power as an industry and leverage for certain measures from the Republican side. Many of us are really single issue voters in crypto, and I expect this to continue to be the case. I frankly could care less about politics at all. I'm obviously 26. I don't have children. I don't have a wife. I don't really have even a home. I don't really care about what happens in the political space outside of moral judgment and crypto being my main priority as a Zoomer in the space. So, guys, if you're like me, you really could care less what happens with Trump and all this garbage, old boomer politicians who just say things, lie, and do all these things that gecko people do. But guys, if you're a single issue voter like me, you want to see coin. You are happy that Brian Armstrong stood his ground here and did not put a bad bill through.
Look, we're going to get Cody Carbone, leader of the Digital Chamber of Commerce, on the show tomorrow for a Neo Finance special. I'm excited to hear his take because I think it differs from Brian Armstrong's take. Obviously, Brian is of the mind that a bad bill is worse than no bill, and he's okay with no action. We got an email from Cody this morning that said, hey, this should have gone through. Inaction is unacceptable, and we have to continue to push this through. I think it depends on which compartments. Obviously, there's so much that's all bundled together in this bill. I wish we could separate this out so that the good parts could go through. I think there are good parts to this bill in defining some rules of the road when it comes to centralized exchanges, when it comes to defining what is a securities token. And again, just to reiterate something from last stream, defining that some tokens are securities is okay. Some of these stable coins that are paying yield are the definition of securities, and that's okay. They should just be disclosed as such. Other tokens are more commodities or network tokens. There should be a carve out for those. Everyone seems to be in agreement on those definitions and on those rules of the road. Then we have some more contentious parts of this bill around stable coins and the banking lobbies, obviously coming after that. Those are the parts that I think should be held back, but I'd love to see the good parts put through. I think it's interesting if you do look at the politics of this and you say, hey, the banks are in some of these guys' pockets, right? And when you see politicians defending banks, the natural reason is why. Like, the only explanation is that you're getting paid from these banks. And I just think, it's interesting for that information to come about so that you can understand where everyone's interests lie, where their friends are, because everyone's playing to their incentives. And if I see someone defending the banking lobby when clearly there's innovation and there's a clear path to paying 5, 6, 7 basis points.
It's the banks, man.
Of a basis point, but the banks pay and lobby the politicians.
Look,
and
I saw this.
Some of the politicians are getting paid from the banks. Other politicians are getting paid from the crypto lobby. And I think, it's important to just see who is in whose pockets.
Dude, I literally talked to Will, our local on the ground DC representative, yesterday, and he said that the banks have this massive lobbying committees, that can get a lot done and that have way more capital and expertise on the Hill compared to any sort of like DeFi group. And then we had this Dragonfly associate put out this tweet yesterday that I'm looking for, that I responded to, and it was absolutely embarrassing how the banks it was literally the CEO. Let me find it. It was the CEO of Bank of America. So here it goes. CEO of Bank of America literally is saying that consumers shouldn't earn yield, so banks can. Interest on stables is going to cause a mass deposit flight. Fully reserved money is not. The banks don't get the fractional leverage that they use to create their system, and then banks lose free funding from these people, and then the profits go bye-bye. I mean, this is happening one way or another. The snowball is going to go. And look, that's the reality. So, all right, guys, let's move on from this. This was huge. Shout out to Eleanor Tourette. We got more to cover on this side after the guests today or in between. So stay tuned on some more political coverage here. And Yeah, let's hop over. The Neo Finance category. I mean, come on, guys. This convergence is happening. Neo Finance is a new category. We've gotten some pushback about the name, about the hype. Doesn't matter. Tomorrow's gonna be massive. Tomorrow, you are all about to realize what Neo Finance is, why this is the most important category in the entire space. And this graphic from Emperor Osmo does an incredible job of showing why. You've got DeFi on one side, you've got legacy finance on the other, DEXs, stablecoins, vaults, yield farming, Bitcoin, oracles, aggregators. On the legacy side, you've got metals, bonds, payroll, stocks, T-bills, compute, asset managers, credit cards, insurance. And guess what you got right in the middle? You've got the protocols that you want to bet on. You've got Sky, Chainlink, Aave, Ari, Canton, M0, Morpho, USDAI, Plasma, Pendle, Paxos, Athena, Daylight, EtherFi, Redstone, Polygon, Stripe, Spark. It's happening, guys. It's happening.
We'll also have Maple. We'll have Sid from Maple come on the show tomorrow. Very firmly within this Neo Finance category. Look, the banks are scared. I think there is a bigger conversation to have around the capital flight that could come out of banks and come on chain. But I think we need robust regulation in order for fractional reserve banking to still take place, but take place on chain and take place safely. Because imagine if all our money had to be collateralized. Imagine if it all had to be backed 1-to-1. What, are we going to go back on the gold standard? That would crash markets all the way abysmally down to zero. You don't want that to happen. We don't want that to happen. We want money to be on chain, but it's going to be slowly but surely as an integration process. And there's going to have to be regulation as a part of it. And so it's going to start with this representative RWA class. And if you go to RWA XYZ, we heard from Bartik yesterday, this isn't the best distinction, but it is something. And it shows which tokenization protocols are tokenizing things directly on chain, and then what is using the blockchain as an accounting layer, simply representing this illustration of what is actually held somewhere else, like the DTCC. This is, people are going to have a problem with this in the short term. I tend to think that it is still bullish in the long term as a stepping stone, ultimately to get to a more composable, open, permissionless blockchain world where all of these are interoperable together. But I realize that in the meantime, this poses a problem for the existing suite of blockchain-based finance. I tend to think that this is going to continue to happen. But again, we need to have an integration path that does not shock the existing financial system. We want to carry over all of the credit and allow blockchain to unleash more credit. That's what we're looking for here. More credit creation, and allow the credit multiple to take place so that your bags, my bags, everyone's bags go to Valhalla, inshallah.
Man, I remember back in DeFi summer, all we wanted was more credit to keep this thing going. Unfortunately, we did not get it. But we were all looking for the next under-collateralized leverage protocol to come about.
Well, I'll tell you, the best under-collateralized leverage protocol is your local regional bank. They're the ones that are writing loans. And when they get federal funding and then they can multiply that money, Arthur Hayes, I must say, phenomenal piece called Frowny Cloud yesterday, talks through how US is now performing this unilateral, basically this go-to-market strategy for winning that China does on a 5-year plan. US is now doing with Trump. They're basically saying these are the sectors that we want to win, and it makes financing these industries extremely easy because when you have a top-down approach, Trump says, hey, we want oil, we want AI, we want minerals, right? All you have to do is you just have to, if you're a company in that industry,
I know, right?
You go to JP Morgan and you say,
you the
hey,
green light
look,
to buy coins.
We've got a demand. We've got proven demand. We've got basically an order from the US government that says, hey, please build this. There is a demand floor. And that makes financing that when JP Morgan goes and looks at, hey, are you sure you're going to sell all these and be able to repay the loan that we give you to build this all out? Yeah, because the US government is going to buy it straight from us. And so it makes loaning out that money extremely easy. And it creates a much faster velocity of capital for banks to ultimately lend out that money. Credit
Yep.
multiples from there. It's obviously faster to credit creation. I think we can
Guys,
see
this is Neo
GDP.
Finance.
I think we could
This
see
is
GDP print 5-6%. And I know Andy's fired up about Neo Finance. I think there's an
Yep.
extreme integration process that's happening. If we do get 5-6% GDP growth and we have a lot of efficiency gains from legacy finance joining blockchain rails,
Yep.
the whole world goes Neo.
I love it. I love it. All right, guys, moving off from Neo Finance. Tomorrow's got a huge stream for Neo Finance. So, guys, stay tuned for that. Drink your Celsius, get your caffeine in there. Let's keep this thing rolling. Oh, ho, ho. The spicy tweet from the MegaETH competitor, rip.eth, who's getting his butthole ripped, a new one in the comments on this one, by the way. The top 3 MegaETH apps are launching elsewhere. Cap to Ethereum, Noise to Base, GTE to App Chain. What does that mean for Mega? Rob, what does that mean for Mega? To me, it signals that these apps were incubated by MegaETH. They were able to grow. They had significant traction. And then at some point, they kind of grew up out of their kind of adolescent phase, are ready to go live. And for some reason, either couldn't strike a deal with MegaETH, MegaETH didn't want to pay them more, or the team wanted to had a better offer from elsewhere, saw more value in being elsewhere. You just got to wonder, like, why leave MegaETH? And like, what does this mean for Mega Bags? Our fund as MegaETH investors. I'm a Fluffle holder. Like at a certain point, you start to wonder, like, what is left on MegaETH? I really, really, really want to see them win. But this is problematic.
I think we should remind our viewers about the app chain life cycle, the modular graduation from a smart contract on an L1, ultimately to an L2, and then launching your own app chain as you own your own block space. This is something that we saw play out in the modular thesis. We know that this is happening. And frankly, when you have an L1 that scales, like Solana and ETH have scaled, what's the purpose of an L2? Greater throughput? New apps? A lot of this is becoming possible on the L1 again. And so I think, again, it's all about the incentives. You're on mute. Money's raining from the skies. And I anticipate a lot more coming from this.
It's the grants.
It's the grants. And when the grants are up, why not move? Right?
Oh, man. No, but I don't think Mega did crazy grants. They just incubated these teams so well. And then these teams grow, they raise from Paradigm, and then Paradigm just pulls them out of MegaETH for some reason.
You want to own your block space.
It's just weird, man. It's just weird.
I wouldn't want to be an L2 these days.
I don't know, man. An app chain L2 is a rate where you want to be, I thought. I don't see why that's a problem.
An app chain, yeah. Is MegaETH an app chain? No, they're general purpose, fast throughput L2.
Yeah. So, yeah. I mean, that is MegaETH. I mean, we shall see what comes of this. It's definitely a unique situation for them. And they're supposed to be mainnet like this month. And I think people are waiting for it, and we are all waiting for it. And so, yeah, guys,
what is there to do on Mega if it's not GTE, Noise, Cap?
Yeah. I'm not sure, Rob. They have the stablecoin product with Athena,
right?
And they're gonna have DeFi, but it kind of makes you wonder. So
I think a lot of these L2s are going to follow in the footsteps of Polygon. I think we had Mark and we had John from Polygon on yesterday, or maybe it was a couple of days ago. But they're explaining how they verticalized the stack and they're becoming a payment super app. Look, we also had Mike, from Figure that told us, hey, super apps aren't everything that they're made out to be. There's a lot of dApps out there, and I want a wallet-centric experience where I can use my wallet like a browser to browse all the dApps that are out there. So I think there's a barbell approach. You've got wallets as the interface layer, and then on the other end, you've got dApps, right? And Aave, Morpho, Athena. You've got apps that are really, really solid. As far as the blockchains that are in the middle, they're getting commoditized. And, not all block space is made equal, but I do think that we're going to see a lot of chains struggle to find a lot of apps to stay home when building an app chain is so easy these days and it's so incentivizing. Next up, we've got Mando.
It'll be really interesting to see.
Always a good time to chat markets with Mando.
Boys, I've been dialed. I've been surfing daily. I've been in the gym. Like, I feel great. I probably lost like 8 pounds. Dude, there's waves today. Like, I'm dialed right now. Like, full on. There's pull-up bars right outside my house. Been ripping those daily. Walking, surfing, running. I mean, dude, I am ready to rip. I am ready to rip. Let's go. All right, we got Mando in the back. Let's get Mando up and let's get this party started. Yo.
Hey, guys. Up, how you doing? I like the energy.
Mando.
Always good to be on this show.
It's always connected, man. The health, the mental, the physical, the trading performance, it all comes together.
Dude, completely agree. I generally have a pretty positive attitude, but if you start the day with some exercise, it's impossible to have a bad day, in my opinion.
Yeah. Oh, yeah. Start off with a win.
Yeah.
Any wins recently, Mando? You've been staying patient. You've been in.
Yeah, Mando. Last time you were on, you and I were both pretty bear hold, and then I think the markets kind of showed us up a bit.
I won that trading competition.
I did see that on synthetics.
What? Let's go.
Being bearish.
Yeah,
I won the trading competition. I am more bullish. I've actually got the most long I've been in about 8 months. Right.
Same here, man.
$1 million prize on that competition, right?
No, mine was the second round with like 50, I think it was 300 traders.
Okay.
But it was only 250 or 200K, I think it was.
That's a reasonably sized house.
Yeah. That paid for Christmas at the time.
Oh my gosh. Would you buy your wife a Lambo, dude? Like,
tell your wife about that. Come on. that goes straight away. I honestly took some time off last week of last year. And yeah, I was just kind of away from the screens. I came back. To be honest, the first coin I bought was Monero.
Nice.
Just like 450 area, and I bought gold and I bought Google. Those are the 3 buys at the start of this year because they all looked like they were breaking out towards all-time highs, and then they actually have just continued to go that way. And then about 2 days ago, or yesterday was it? No, 2 days ago, when Bitcoin had that run to 94K. I'm like a bit of a breakout trader when it goes to the upside, so I was like, this looks like it's going to break back up. I still think Bitcoin's going to go back up to 100K plus here. So I bought a bunch of ETH and I bought a bunch of Bitcoin. Today, I've rotated a decent amount of that Bitcoin into ETH, but it's the most long I've been in a long time.
Yeah, same here, man. I was very, very cautious over the holidays. I basically, I don't know if you've done this before, guys, but doing a full clean wipeout of your entire portfolio. I just did it at the end of 2025 for tax reasons, just to clear out all losses. I had a lot of like long-term capital gains on like random NFTs too, and like random tokens that I'd held for so long that I had gotten so early, but I was just like, I don't really want to manage these anymore. And so I basically clean slated my entire portfolio, and it felt amazing. And so like I'm starting from a kind of like a new level. And yeah, Mando, same thing for me. I was just waiting. I was like, there's no way I'm entering this position in the low 90s and the high 80s. It's just not worth it for me from a personal stress perspective. I was telling you I expecting lower. Yeah. And then as soon as we got that first breakout, I remember I was like, Rob, oh boy, they better give me one more chance. And then they gave us one more chance, and I just full stacked that second chance there.
Yeah, I said this the last time I came on the show. Like, I'm a big fan of concentrated big bets. I don't like big long tails of positions and portfolios. Like, I like to just look at 1 or 2 things and be very big in them when I think it's the right time. But that requires patience. And I hadn't really owned Bitcoin ETH since we kind of broke below 100K. So it's been a couple of months really where I kind of since I went back in, and this time I've gone in much bigger than where I was even at 100K because I've been reducing before that. So I think this is good risk reward situation. This Clarity Act stuff I don't know if it's just posturing. I still think there's a good chance they get a deal done this year at least. But that, for me, actually, the reason why I rotated more into ETH today is because I think BitMine's going to get this this vote done. I think it's a good shot that at 9:30, I think my time, 4:30 p.m. Eastern, they're going to do that vote, and they're going to increase the share class by a ton. So my gut is, and that's a bet. Like, I don't know. I asked Grok today about it, and they were like, "Yeah, I think this will pass." And so then I just moved more of my Bitcoin. And ETH was underperforming Bitcoin slightly, and now it's seemingly coming back a bit. I think if they get that vote done, you're just playing the technicals, right? You're playing that, Tom Lee's about to buy a ton.
Yeah, he is. And so dude, we had the Framework guys on our show last week, and they actually did a really deep dive into all of BitMine's, like, basically public disclosures.
Interesting.
And they came to realize that Tom Lee has a 6-figure Ethereum notional, so over 100,000 tokens, ETH, in the money call options live, and probably is selling puts. And those trades are both on right now. And this is something that, like, you can't really figure out unless you, like, dive really deep. And so their thesis is that this goes through. ETH really outperforms the next couple of weeks, and Tom Lee absolutely cashes in massively on this in the money call position of well over 100,000 ETH, in size.
I know he's been doing that, because I know he said it publicly. I met him in Korea, and he said he was putting on like, we had like a dinner thing. That he's definitely using options. I have no idea about the size, but he's definitely using options, and I think he's going to get this vote done, which just puts it in a good position here for. I mean, if he can file a shelf for the amount that he wants to, like, it's a good bull case for him being the big buyer of ETH. So I like that trade right now in terms of majors. I don't really have anything else on, apart from just a very, very big ETH long right now.
Same here, actually. Just Bitcoin and ETH. And we have some smaller, like, kind of like token positions, but I don't feel confident in holding size in anything really other than those two at the moment.
Yeah, because there's like a bit of, who knows what's going on with Iran. It felt like a day or two ago, like that was going to maybe flare up. Now it doesn't, but you just kind of want to own majors if that happens. Like, the moment you got, like, Bitcoin moved down 1%, all the alts just got destroyed, apart from ETH, basically. So I think market just seems like a good position. I don't know if this is a return of a bull trend or anything, but I just don't see how Bitcoin doesn't go to 100K.
Yeah, it feels like it's disbelief mode. Dude, so I'm in Hawaii, and yesterday there was probably 25 fighter jets doing runs right around Pearl Harbor here, which also was the location where there was U.S. Naval ships taking off and heading towards the Middle East, is what Polymarket said. That they can be kind of propaganda-esque, but they did put that out. And dude, yesterday was kind of spooky out here, guys. It was like, wow, like, usually you get one fighter jet every couple of weeks, and it's like, holy crap, there's an F-36. It's like, because you hear it first, it's like, and then you look up, and then guns by. It was like all afternoon yesterday.
You live there permanently?
No, I'm just here for a month. A little bit of spiritual health, physical maxing.
That's the best.
Yeah.
I quit. When you leave investment banking, you get like 3 months off. So I kind of maximize that and quit my job twice in my career in investment banking. And one of those, I spent a lot of time in Hawaii. Maui, Paia.
Oh, Maui.
Lived
Nice.
like a month in Paia. It was great. And then, Oahu was fun. North Shore.
Yeah, I'm on Oahu. I'm on the South Shore.
Okay. Yeah.
Man,
I'm jealous of you.
I'm throwing a health party this weekend. Have you ever heard of a health party?
No, but that does sound amazing, man. No, the funny thing is, you mentioned Framework. Framework, one of the partners, he doesn't know this. His name is Michael Anderson, which is my name, and it's been the best OPSEC forever for me in crypto. Because you type that in crypto, it always comes up with his name. So if he does well, if any of my businesses do well, I'm sorry, Michael Anderson at Framework, they're coming for you. All right.
Pretty good, man. Yeah, he's the one who dug into the whole BitMine call position.
Yeah.
Oh no, don't worry. It all gets put on my feed as well. I take recognition for all of his comments as well, so it's great.
You might have to load up on more XMR, load up on more Zcash if things go too well.
I did. Annoying thing, I did sell some of my XMR too early. Like I bought it for that breakout because I like buying things as they're going to break out towards all-time high, and then I sold it at 590. I sold like 60 to 70% of it at 590.
Yeah, man. I mean,
it's a nice 25% rip.
Oh yeah.
No, but it's one of these ones where like now it just looks like you can just go, keep going, and like you don't know if you should get back in or not.
Yeah,
well, if you look at like the silver fractal, guys, it looks pretty insane to like look at the silver chart compared to XMR. It's quite a bit of, it's like double the time frame, but it's insane the similarities on silver and XMR.
I'd be curious to see something similar between Zcash and gold, right? Because in both cases, you have kind of the secondary to the first one that broke out, silver to gold, obviously, and then XMR to Zcash.
I don't know though, man. Zcash kind of seems cooked right now.
I read that Arthur piece. He said he was buying more. We'll see.
Yeah, it feels like Monera's Chad's in, right? Zcash is left. I don't know. I like trading the volatility and these. Once something breaks out to all-time high, they always do like a 10% move down, and you kind of get a chance to get in. I hope that I get a chance to get in back at like 650, and then I'll go back in big, I reckon, on Monero.
Do you do much like digging into kind of the fundamentals at all? Or are you mostly a technical analysis guy?
Honestly, my background is in fundamental analysis, but with crypto, I find it easier just to buy things as they're about to break out to all-time high. I like buying breakouts. So like I'll have a fundamental thesis around the coin or around a theme, and then I'll look for when the chart kind of proves that that's going to be a good time to buy from a risk reward standpoint. I'm not a big fan of buying things, catching falling knives or buying support or anything like that. I like to buy stuff as it's just at resistance and it looks like it's going to break through, particularly for all-time high, because then, right now, even this ETH position, right? I like it, but it's not one of my favorite sorts of trades. Like my favorite trades, if ETH goes up, I think it got like 10, 20%, whereas Monero went up like 30 to 50%, right? And that's because it hit an all-time high, and then it goes into price discovery, and who the hell knows where it then goes. So this for me with the ETH trade is just that I just think this BitMine thing will now be a good momentum driver.
Yeah, we shall see, guys. We're about an hour and a bit out. Mando, one thing that I wanted to throw your way today, outside of the Yeet $1.3 billion milestone, which huge congratulations for that. I mean, you guys are just absolutely just firing. So congratulations there, man. Is Yoo-Hoo comes out and says, I'm sunsetting Yaps and introducing Kaido Studio. We had Nikita Beer come out today and said that they are fully disincentivizing all InfoFi and that is effectively going to be banned from the platform. Crypto Bobby Rob from the recruiting firm put out a tweet today, interacting with your internet friends on crypto Twitter without some fake pudgy penguin spewing GPT-4o mini slop in the mentions. Did X just solve? So in the midst of my tweets aren't getting shown to anyone, this algorithm is cooked last week to X banning InfoFi. Did X just execute the most bullish turnaround in a week's time because like Moon Overlord is screaming at Nikita Beer on the timeline? Like, what the hell just happened? And are you bullish that InfoFi is finally over?
So there's two questions. I think it was really good to see that X did that. I think that CT is one of the strongest communities on Twitter. Like, also, it's one of the wealthiest. At times it is, but it also it seeps into like the FinTwit also community, and like these are core bits of Twitter, or X. So I think it's really good that they did this. I think they probably were left with this issue of just like there's just so much slop. So what do? We either decrease crypto as a thing in the space so it doesn't ruin it for everyone else in terms of the algorithm, and they tried that, and then everyone who is a power user was like, this is terrible, and then they went the other way and go, right, we just have to we have to improve the quality of it. So I think this is smart. We've used Kaito in the past before. I spoke to him briefly, Yoo-Hoo, last week, and said that at the time he said that they were planning on pivoting into TikTok and Instagram, but I never actually got on the call with him in the end. But I don't know how long ago they knew about this, but he was talking about that last week. So I'm sure they got some sort of an indication that this could they needed to shift away from X. So I don't know. Like I do think that the original reason for InfoFi, if you remember, was because we had all these influencers basically just dumping on their followers, and it was like, right, let's create an incentive system for people who are writing good commentary and actually are alpha bringers to the space. And that those first like few months of InfoFi, I really felt like, yeah, it was promoting the right people, and I was like, wow, it's really cool to see that people that I respect are at the top of these leaderboards. And then it just became this weird world of just farming and crypto. We can't have nice things when there's money attached to them, and we just ruin them in crypto. So I think it got started with the right reasons, and then it just kind of spiraled into something which no one really wanted. I think they were even aware of it. Like their original aims about what this was turning into what it became. I think maybe it's good for them to have a bit of a refresh.
They
And you're on mute there, but I think that's a good take. I think you know, there was so much slop. We all saw it in the replies on Twitter, and it you know, didn't drive a lot of substance. I think for so long it was, you know, the idea that you could pay for attention, pay for mind share, and there was always the idea of smart followers. I think was one of the more beneficial parts of the platform, but it didn't seem to drive anything tangible on the other side, aside from kind of just reshaping public perception.
Yeah,
Yeah.
I mean,
So you
it
go.
was no more OnlyFans models LARPing as crypto bros. Bullish is in the chat.
Yeah, exactly. I think it's gonna be nice to get back to this like core. It's not even like the tourists are leaving, it's like the bots are leaving. And that I think
Right.
everyone kind of get behind that. So a better discourse. Hopefully this is like a 180 for crypto Twitter. It was funny how prices started to go higher the moment they started to make those changes. Maybe we do just need to be speaking to each other more.
Yeah. Yeah. Mando, let's talk about ETH. We guys got a couple minutes. You guys hit this $1.3 billion milestone. Where's most of this volume coming from? What are the most popular games on ETH? How are you seeing this grow? Man, I mean, 1.3 billion seems like a lot. I feel like from your perspective, you're probably kind of like, dude, this is gonna get 10 billion. Like where are we at?
It is growing just insane amounts. So I think our first month in April, we did 40 million of volume. And then last month we did just over 200. So we've 5x'd the business in about 7 months, 8 months. The top line revenue's up about 10x since then.
Wow.
Now these businesses, like the top line can be kind of meaningless because you have so many costs all the way down, and that's just the world of growing a casino and a sports book. But yeah, I think it's a mix of things. I think honestly, there has been a bit of a sea change. I felt like in the feeling about casino style products. Maybe that was and sports books with like the move for prediction markets. But I think if you look at like the percentage winners across meme coins, NFTs, sports books, prediction markets, and casinos, they're not that much different. Like you have like 5% winners and everyone else is kind of losing. Prediction markets is actually slightly higher, but the liquidity is often very difficult. So you can't do it in like massive size. I think prediction markets, you get like 10 to 15, but meme coins is like 1% of wallets win. So I think that there's this idea that, right, people are actually just here to try and make more money. And like, is it easier to make money on meme coins than just like doing a dice roll at 50-50? Like we have 50% basically 49.5% versus 50.5%. Our edge is like 1% on some of these games. So you can just like, if you're just here to actually just make a 2x and you were like, in your mind, that's kind of what you were here to do. I think people are like, okay, well then maybe I'll just do that at a casino, or I'll just own Bitcoin and I'll do that as my degen thing on the side, you know? So there's been a bit more of a product market fit there. And then also I just think they had a terrible reputation in terms of the owners and how they operated. Like if you search any of these sites, it's always, oh, they locked my funds, or these guys are scammers.
Yeah, man. I mean, I don't know if you saw Drake and Stake with Aiden Ross getting the RICO charges on class action.
It's all of this sort of stuff. So we tried to do stuff just a bit different. Like the other co-founders, Ben Lamb, who's like a top 30 all-time winner of poker winnings, someone who's relevant 15 years ago and still winning poker tournaments like today. And then myself and Keyboard Monkey, who I think people know just from like a trading perspective. And that's helped. So you get like a lot of like big, you get a lot of big kind of people, VIP sort of people that like come in and just like to have a conversation. But it's been a mix. Like we have built like a bunch of custom games, but a bunch of poker games that have come out recently. We've done really well. That's about 30% of our volume. 10% is the sportsbook, which we launched 2 months ago, but KBM wants to take that to like the moon because his background is really in sports. And then the rest is like normal casino style table games. But I mean, you only, obviously I can't like disclose the people and the sizes, but people swing it. Let me put it that way.
I bet 6 figures on dice rolls and things.
Oh my God. Like
just insanity.
Yeah, the variance on some days is just like absolutely insane.
Chat says Rubet got charged also, right? I think so. I think they got something.
I think they got like semi-charged. They were apparently like advertising to kids on CSGO. Like a lot of this came from the gaming community. So if you know with many of the big, like, do you really see Stake in this space that often? They don't really sponsor anyone on CT, right? Rubet don't really either. Like a lot of these are not really crypto brands. They're actually like casino brands, which then use just they use crypto as the payment rails. So if we've kind of tried to build this as, right, you know us, we're going to try and build this. If you're gambling, gamble. I'm not going to tell anyone that it's going to be an investment advice or anything like that. But if you are, then come try out the site. We have a sportsbook, casino, and we also have like this whole community style aspect of it. So we did like big moments last month. We did 50 million of volume, and it's kind of like a whole community tournament thing. We've had a lot of success there. So I don't know, blue sky thinking. Let's see how far we can build this.
This is how.
Excited.
Sorry, this is how I got into the space originally. I was a poker player. I used to play poker in high school, and I would leave school to go to a casino like 10, 15 minutes away and play poker, fake ID, the whole thing. And like my buddy was like, "Hey, you're being an idiot. Like, stop leaving school to go play poker. Just play poker online with Bitcoin." I was like, "What's Bitcoin?" And then got some, deposited, started playing poker online. And I just realized that, the house had an edge, and I was able to, kind of figure out this altcoin thing, and markets maybe had better odds than, this casino that had a pretty significant rake. But at this point, it is so difficult to discern, especially in the meme coin trencher world, what coins are going to run. It's basically a dice roll. And we saw the numbers that came out a couple months ago that compared, how many coins and how many traders were in profit. And it was much, much worse odds than a casino. Casino gave you much better odds, especially if you guys aren't taking much of a rake and the odds are really close to 50-50. That is pretty good when it comes to someone who is thinking about, am I going to sports bet? Am I going to go to a casino? Am I going to play poker? Or am I going to, take a big swing on an altcoin? You don't get much better than 50-50.
I think that's the thing. Like, how many times have you bought a coin and been like, if it 2x's, I'll get out, right?
As a meme
coin, right? And you're like, look, I'm buying this at 10. If it goes to 20, I'll sell some. Like, you're basically trying to get a 2x, and your odds of doing that are often horrific. And like, I'm not saying, again, this is not an investment thesis, but if you actually know that that's all you're trying to do, you're just trying to do a 2x, and you're trying to buy a meme coin that somebody just put in a group chat, like, you're going to lose way more than 50-50. So I think that's been the slight difference, that people who are just admitting that and being like, look, I want to be in crypto. I like being part of the community. I want to have a bit of a degen bag. I want to bet on a sports game, or I want to bet on just a 50-50 coin flip now and again. Sometimes the odds are right there, so it can be better.
Yeah.
Man, last thing from me about the markets. You mentioned you don't know if this is going to go to all-time highs. You don't know what, you're expecting 100K. I was in pretty like firm disbelief mode. I think the market's still there. It's still in a weird spot right now where, like, if you've been sidelined, you do not want to buy here because it feels like you're just buying the, bear market rally. And also, I saw this tweet from Gammy Chan, who was basically saying that, like, because everyone's expecting the 40-year cycle, that, like, as Bitcoin kind of slowly climbs up and starts to kind of like break that logic, there's just going to be like these incremental buyers that have to, re-enter, at the same price or higher, or, lower if they really sold high. I mean, I guess like the question is like 4-year cycle question mark, like is can we effectively retire this? Or like if we turn around here, are we going to feel really dumb for saying this time is different? What's your take on like the state of disbelief and kind of how the sentiment is affecting your psychology and just generally investor psychology now?
Look, what I've quickly found about CT is that you can find whatever view you want to find. And sometimes the views that you find are often the complete opposite of the right view you want to find. So when I put on a trade, it's much more based around my own personal view plus the chart. Right now, for me, the risk reward on Bitcoin here is that it either breaks down below 94.4K and we kind of have a reversal there, of which you can have a stop loss at 94K, which is a 1.5% move, or it's going to go up to 100K. And I think there's a decent chance it then goes up to like 106K. So right there, you've got a trade, which is basically a 1% down trade versus a 4 to 5% up trade. Like, I look at trades like that all the time. I think right now on ETH, it's a slightly better trade because I think that the downside move there is more like 3,200, where you can have a stop loss, and then your upside, actually, I think it goes all the way to 4K. So just ignore. Because you could search and find whatever the hell you want about whether it's a 4-year cycle, or if Gamma Chan's right, or if Ansom's right, or if Traderman's right. It does not matter. Look at the trade, look at the risk reward of the trade. If it works out, it works out. If not, you put on the right trade with the right risk reward.
Mando, man, wishing you the best on this balls deep ETH long.
Thanks, guys.
We're on the ride with you, buddy.
Thanks for joining us today, man. See you soon.
Thanks, man.
All right, buddy. Cheers, man.
All right, we'll do a
man,
quick commercial
I'm just
break.
glad to hear that he's bullish on ETH like us, because that is my heavy, like, ETH is my heavier allocation right now compared to Bitcoin. This Tom Lee thing today is huge, guys. We are going to be streaming it today. We're going to have a short AI episode today with our guys from Lagrange, and then we're going to quickly rotate into Tom Lee. It's full cowboy mode today. We'll see if Rob's okay with that. We'll take a quick standby and we'll be right back.
Yeehaw. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at Trezor.io.
Go anywhere on-chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its real upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience. All right. We've got Chris Bradbury and Jordan Jackson, the Summer.fi team, co-founder, CEOs. yield aggregation, HyperEVM launch, big day today. Hypercore, HyperEVM, Hyperliquid's obviously dominating the perps landscape. Summer.fi is one of the biggest sleepers in Neo Finance, a category that just continues to grow. Guys, let's get the Summer.fi team up live. Continue this stream. Big day today. BitMine shareholder meeting is on. Will ETH pump is the question. Let's get him in.
Hey.
Gentlemen, welcome to the show.
Yeah, great to be here.
Hey, nice to meet you.
Absolutely.
Yeah.
Welcome, guys. This today marks the launch of Summer.fi on HyperEVM. We've been big Hyperliquid fans for a long time. Obviously, they kind of kick-started the perp space again. Before we get into why you guys are so bullish on Hyperliquid and decided to launch here, could you just give us a background on yourselves and Summer.fi? It's your first time on the show, so tell us a little bit about how you guys arrived here with Summer.fi.
Chris.
Yeah, sure thing. So I mean, both myself and Jordan came from Maker, and so did the Summer.fi project. So we both in Maker from like 2018. I think Jordan actually maybe just before, right, end of 2017. But yeah, Summer.fi was originally the front end for the Maker multi-collateral DAI stablecoin project that launched in November 2019. That's when Summer.fi officially launched for the first time, originally under the name Oasis.app. And then when the foundation dissolved, Maker Foundation in 2021, it spun out into its own separate entity, and we've kind of expanded from then away from Maker into kind of the wider DeFi ecosystem, kind of on that journey then to beginning of last year, where we launched a Summer token and the latest Summer protocol, which takes us all the way then to today, launching on the HyperEVM, and yeah, continue to expand across the different various Ethereum chains.
Yeah, I mean, Chris,
Jordan,
Chris mainly started, but yeah, been in the Ethereum and DeFi ecosystem before it was even DeFi really, and yeah, have seen basically all the things come and go in DeFi, and yeah, just really super excited around basically the yield ecosystem, I'd say, within the Ethereum ecosystem, and obviously the HyperEVM ecosystem as well, for reasons we can definitely get into, but it seems like it's poised to be a big one, definitely big ecosystem.
Yeah. We got into Hyperliquid just a couple days after it launched. We actually
The day, no. The literal minute the token launched, like within a minute or two.
Andy likes to be very
3
precise.
minutes maximum 3 minutes.
Dude,
I was in Hong Kong at the airport smashing by. Like, of course I remember this. And then it freaking 40x'd.
We were invited to join the Hyperliquid protocol all the way in 2023. I think we even talked about a partnership with them, and we let that one slip through the cracks, unfortunately. So we're very committed to the minute that we bought Hyperliquid on the day that it launched. And so you guys are also quite bullish on HyperEVM, on Hyperliquid. Why did it stick out to you? Why Hyperliquid? In all the craziness of the perp space, how does HyperEVM help accomplish Summer.fi's goals?
Maybe I can step in just very briefly. I think so. If we take one step back and we look at the Ethereum ecosystem, and we look at specifically the yield ecosystem and the DeFi ecosystem within Ethereum, one sort of somewhat negative externality of having so much growth is the underlying fragmentation. I've seen this like map of something that you guys have put out around, just yield bearing stables. Like there's SUSDS, there's SUSDE, there's all of these different yield bearing stables, and from a customer point of view or a user point of view or even an institutional point of view, you have these decisions of like, well, which one do I use? What's the difference between this one versus that one? And those are just yield bearing stables, not even talking about different vaults and things like that. So that's the Ethereum ecosystem, the DeFi ecosystem within Ethereum. We feel that similar to the Ethereum ecosystem, the Hyper launch, as you say, was incredibly fair. Probably the most fair since the Ethereum sort of sale. And given that there's so much community, like organic community love within the Hyper ecosystem, we feel that it will probably be a very similar trajectory with respect to the burgeoning DeFi ecosystem and the yield strategies and the yield ecosystem that comes with that. And there's going to be a lot of fragmentation. We already are seeing it within the Hyper ecosystem, and that's where Lazy Summer and the Lazy Summer protocol and the product that we have, we think, is a perfect fit. Because with one simple deposit, you're getting the sort of best risk-adjusted yield across the entire ecosystem. You're getting risk management and risk curation out of the box from Block Analytica, which also has the Maker connection. Probably one of the most trusted and most most trusted risk managers and risk curators in the DeFi ecosystem. So I'd say that's why we're quite bullish on the Hyper ecosystem and want to grow with it, basically.
Love it. So guys, what actually shipped today with Lazy Summer on HyperEVM, and what can users do now that they couldn't do before? Talk to us about the product launch here.
Yeah, sure thing. So I'll take. So we launched two new vaults on Lazy Summer. So we've launched a USDC vault and a USDT vault on there. And what effectively the Lazy Summer protocol does, as kind of Jordan alluded to there, is users deposit just simple USDC or USDT, depending on what vault they want, and it will then automatically allocate to the supported kind of like protocols and markets under the hood, and rebalance to the highest yielding markets at any one time. So from a user providing liquidity to any of these markets on the HyperEVM, they always want to be earning the best yield they can possibly earn. And a lot of the time they want to be doing their own risk management and so on. So we're just making it a lot more simple for anyone on HyperEVM or on other chains that want to be able to get exposure to HyperEVM, but haven't dived into like the complexities of where they should be putting their money, where's the safest thing, what are the different types of collateral backing these things. Here they can trust that they've got like a world leading risk manager in Block Analytica doing the risk assessments, doing the kind of risk caps and so on. Within the Lazy Vaults, it will never just throw kind of 100% of your capital into one market just because it's yielding the highest amounts. The risk manager sets the various different caps and so on. So if you want to just earn in the easiest way possible, like the best risk-adjusted yield on the market on HyperEVM today, now you've got the choice of both USDC and USDT. There's only a handful of markets been added today for the kind of the rollout of the kind of safety first and so on. But then over the next few weeks, more and more markets are going to get added. Even as early as next week, actually, there's a couple of markets that haven't got risk caps set yet. They're about to come online, probably as early as Monday. But yeah, from a user point of view, it was always self-management up until now, picking a variety of different morpho markets or whatever, different protocols like Felix and so on. Now they can just go and deposit in one place and know they're going to earn the best yield and so on.
For so long, just real quick, Andy, for so long, there was, chain abstraction, which you guys are participating in, helping people find yield on different chains and kind of manage, where they're getting it from, making it really easy. You guys are also kind of taking this a step further. I would call this yield abstraction, where you don't really need to know where the yield source is coming from in particular. You guys are abstracting this away. You have a risk manager that's coming in and doing a lot of this management and risk management for you guys, and you're passing on that yield. And so it's abstracting, the complexities of the yield itself, not just the chain, but also the yield source. Andy?
I mean, my thought kind of on that exact point is just then the question of like, with this aggregation thesis, how does Lazy Summer decide where capital goes across Hyperland, Felix, HyperEVM, HyperBeat? How do you kind of allocate capital in a fashion without just chasing APYs, chasing yield, and paying fees for vaults and different types of smart contract risks? Obviously, we talked about Block Analytica. How does the Lazy Summer application or product allocate its resources?
Yeah, so we've got a set of like kind of AI powered kind of automated keepers that do the rebalancing. So they will ultimately seek the highest possible yield. All of the vaults that have been launched are effectively kind of like yield seeking vaults and so on. So they will look for the highest yield possible. However, they will also take into account things like the available liquidity on the underlying markets, as well as, like I said, the risk caps and so on. So there are markets, for example, that will never be allowed to take more than 30% of the vault's TVL as capital. So it may be offering the highest APY. Maybe it's triple the next level's APY. But if there's say like $10 million in the vault, it will never be able to give it more than 3 million. But the keepers will also take into account then how much available liquidity is actually in there, making sure it isn't taking all of the available liquidity or being the only available liquidity in the vault. So if there is starting to be kind of like something happening, or the keepers can detect kind of like abnormal conditions within the vault and so on, it will also start to remove capital from those markets in there. It also looks and it's designed to look for kind of like lender concentration and borrower concentration as well. So if there's only 1 or 2 borrowers, then that's kind of a red flag, and it won't chase that and so on. Or if one borrower represents like 90% of the capital and so on. So it very much is a kind of like risk first approach, but chasing the highest possible yields in ultimately the safest way and the easiest way as well.
And will you guys support USDH, or is that not part of the plan currently?
Yeah, so for us, I think it's definitely both USDH as well as Hype are certainly within the plans. We just want to roll out with sort of, it feels like USDT is kind of at least within the yield ecosystem on Hyper is kind of the most popular. Also, of course, USDC, but as we get more familiar, we're going to be rolling out certainly USDH when the yield sort of ecosystem is a little bit more robust. It was not as robust as we'd like it to be, probably to propose a vault in and of itself. And then of course Hype as well. The native asset, we stick to the highest quality assets and the highest quality yield sources. On Lazy Summer, that has always sort of been our brand, is highest quality first, especially coming from the Maker protocol, or Sky, I guess now. And for us, when we're in the Ethereum ecosystem, is USDC, USDT, and ETH. That's it. And within the Hype ecosystem, we feel USDT, USDC, USDH, and Hype. So certainly, definitely in the plans.
And so you alluded to Maker as one of the primary sources of yield off of Hype, the HyperEVM ecosystem. They do great work. You guys came out of that ecosystem. They've been so instrumental in the success of DeFi across all of the blockchain. And so what are some of the other venues that you guys see like some really solid yield coming from that has been sustainable in the Ethereum landscape?
I think Morpho has been like one of the standout ones, and actually Morpho is almost like the standout example of what the value is in Lazy Summer as well, because he talked about kind of like chain aggregation and then kind of like protocol aggregation and so on. But then you look at the likes of like Morpho and Euler in particular that have this curator model. There's like maybe 40, 50, 60 markets for USDC on Euler and so on as well at the moment. So it kind of keeps going down to then kind of almost aggregate the different markets within certain protocols and so on. But very like it's pretty regular that when like Jordan, for example, every month will produces like a kind of a rebalance report, so where capital has gone kind of and moved throughout the month, and Morpho is always up there. Obviously a lot of the markets are being incentivized with the Morpho token. It's obviously doing incredibly well as well. That always helps with the yield, but obviously Morpho's found solid product market fit on almost every chain it's on. Obviously Morpho's also on HyperEVM as well. And I think kind of like that product market fit is a kind of really important point and kind of test of time a little bit as well. And another reason I think why like we're big fans of HyperEVM, Hyperliquid, and so on is because it actually has genuine product market fit compared to most L2 chains. There's only a handful out there, I think, that actually have solid product market fit. Same as tokens as well. There's only a handful of tokens that really have like kind of organic growth, real product market fit, and they're the ones that are supported on Summer.fi. Same with the chains, same as the protocols. We're not chasing the highest yield for any protocol. It has to kind of be a tier one protocol and so on. Because like kind of almost the mantra is really, it's like kind of first rule of anything on Summer.fi is you don't lose money. Like that's the rule one, and so on. And then if we can make the users more money, basically by offering them the tools here that saves them time, makes them more, and gives them better exposure, then that's kind of our job. But yeah, Morpho was one. Euler was huge before, before like all the DeFi issues in November as well. Like they were always extremely competitive with the yields, again supported by the Euler token as well. But yeah, Fluid is up there. Like what's kind of sad is obviously like the likes of like the Maker or Sky Savings right now, like Arvage or Compounds, like they're such proven, such battle tested protocols that the yields are generally always a little bit lower there now, and that's the safety and so on. But what's great is when you see on Summer is actually when there is market movements and so on, then more often than not, capital goes into those kind of safe, secure protocols because they suddenly offer the better rates because that's where people trust them and so on.
Well, one thing I would just add there very quickly is, you know, every week new yield sources are being proposed into the Lazy Summer protocol, and they can be proposed by anybody. So of course we get a lot of kind of ridiculous proposals. Well, maybe they're not ridiculous ones, but we get a lot of proposals, and a lot of them get rejected by maybe the community, but especially so by the risk curator or risk manager, Block Analytica. And I think what's so special about that is, you know, often, especially you guys, you're, I think, DeFi users, you know, when we talk to users, we hear two things mainly. One is they use a TVL as a proxy for trust, and they use, you know, their smart friends as a proxy for trust. And now with the Lazy Summer protocol, you know, yield sources are being proposed all the time. You have people who are, it's literally their full-time job to be, you know, very analytical, very deep on the technical weeds, as well as the sort of financial engineering weeds of these different yield sources. And they can make that sort of decision, and you can just always have access to the best stuff, regardless of the TVL per se, as that only one factor. And they can sort of do that underlying diligence, and you can just always have access to the best stuff in the best ecosystems all the time. So you can actually, you know, spend your time doing like things that you actually probably want to do. Maybe just listening to podcasts like this. So.
Yeah, man. You know, we've been like putting together this thesis. We've been thinking a lot about, you know, where we think the space is headed, both coming from more of the Wall Street, you know, finance, legacy banking side of things. And then also we've seen, you know, enough in crypto without product market fit. It feels like it's time to, you know, evolve that side as well. And you know, that's how we came up with this idea of Neo Finance, this convergence point where both of these sides can meet. And one of the aspects of this thesis is not repeating some of the C DeFi, the centralized DeFi, BlockFi, like that whole, you know, ended with a lot of people in jail. We don't want to repeat that, but we do like the ease. We like the idea of, you know, a forgot password button where someone can, you know, basically help us, you know, recover our account. But we want, and so, you know, centralized front ends are okay. You know, self-custody isn't for everyone, but it's important that DeFi is in the back end because that's how we can get higher, safe yields. And so, you know, one of the things that came out of this thesis was the idea of exogenous yield. Basically, there's a lot of yield coins and DeFi protocols now. They're going out, they're issuing credit. Someone like a Maple or a Daylight. Daylight, for instance, is a real solar company. They're going out, they're giving credit to, you know, real revenue. They're creating real revenue and they're bringing it back to token holders. Another one is USD AI is maybe an even better example, extending credit to AI companies. AI companies pay interest, and USD AI, you know, pays yield back to its token holders. And so I'm curious if you've thought at all about, you know, kind of these industries that are popping up where we're able to extend credit and then bring exogenous yield back to token holders. Where and in general, where do you think is like the next frontier for bringing new yield to this industry?
Like, and then Spark announced something interesting either today or last night, I think, as well, right? The collaboration with Anchorage and then being able to offer those clients effectively being able to borrow against Bitcoin and then using that the Spark liquidity layer for that, which I think is fascinating. I think from our point of view, we're less thinking about where the yield comes from, but actually how people can provide capital into the various different markets to then allow other, like either large borrowers, either institutional borrowers or DeFi borrowers, depending on the integration. And again, this comes back down to the Lazy Summer protocol and being able to do what we kind of like call kind of self-managed or self-branded vaults, where kind of like your DeFi apps or your custodians or your kind of large financial institutions can actually go and deploy kind of like working with us, but to deploy their own vaults, get access to these different markets and actually build themselves a product for their own customers. So a self-branded product, whitelisted only to their customers and so on. But again, like you said, DeFi in the back end and kind of CeFi, traditional finance in some ways in the front end, just from the user experience point of view in a way. Like UX has always been kind of the downfall of crypto really, but also just in particular DeFi. And something like myself and Jordan have been working on ever since like 2018 to try and improve that. But yeah, trying to bring more capital on chain. And if there's more capital on chain that can then be borrowed, then we're going to start to see much bigger, different types of borrowers, different types of products as well. Where if there actually is a much more liquidity on chain, because in reality, the liquidity for borrowing is quite restricted to just the major apps and stuff at the moment, the kind of makers, the Aves, Morphos at the moment, like Morpho's doing awesome work with Coinbase and the Coinbase borrowers and so on for with BTC and so on.
That's a great
example.
Yeah, that's a great example, right? Of you know, an easy to use front end, and you guys make it easy as well. And you have, you know, all of these yield sources in the back end.
Yeah. And I mean, I hugely grateful for the compliment of how easy it is, but compared to CeFi or like fintech in reality, it's still a long way to go. And I still think that the ultimate goal here is, and it kind of pains me to say the ultimate goal is like to have just DeFi in the back end of fintech and so on. Because I think in 2018 we had much bigger visions for like everyone being their own bank or whatever. But the harsh reality is like everyone will go for the simplest option that still provides the best returns.
Yeah.
DeFi can produce the best returns, but we need to like go to the masses. Like we're not going to onboard billions of people into a self-custodial wallet.
Yeah,
like
we totally agree.
Phrase.
We've given up on that vision as well.
It's a Trojan horse.
Yeah.
Ultimately, maybe it's aspirational, but I do think it's a stepping stone to ultimately get to the aspirational vision that we've had, you know, going back almost a decade at this point. Jordan,
Guys,
you had, I think Jordan, you had something to add there.
Here.
Yeah. So just very quickly, the only thing I would say is I think very to put a bow on it, ETFs, right? We saw this sort of same thing happen with ETFs. I heard Chris is actually the first person I heard say this, but I've heard it been spouted around a lot recently from I think a guy at Bitwise and other people. And you know, credit, we've seen credit and bonds and other forms of credit be wrapped up in ETFs. And if we're going to see all of the different types of forms of credit and such and forms of yield come on chain, I think we can have a similar thing thinking about it in terms of vaults and things like that, and things like Lazy Summer basically are just going to be kind of similar to ETFs, at least in the sort of user experience. And that also goes back, if you want to do that yourself and on the Summer front end, you can do that. If you want to plug into a fintech app or something and get Summer through that, like the Lazy Summer protocol through that, you can do that. So it's really best of both worlds. And I think that we, in terms of what yield sources are coming on chain, if DeFi is really going to have it there or actually get to mass scale, we can expect all kinds of yield sources to come on chain. And that's why something like Lazy Summer is so important, because the credit market is the smart part of the market as it is right now. So how can we expect users to actually do that underwriting themselves? They need some type of layer to help with that, some type of abstraction layer, to go back to the beginning, to help with that. So yeah, that's kind of my perspective on that.
Yeah, and that's where like the analogy to the ETFs come in, right? It's very similar. These folks aren't trying to go buy Bitcoin on the Bitcoin blockchain using some crazy DEX cross-chain swap thing in self-seed phrases, et cetera, et cetera, et cetera. Gentlemen, two choices, one moment. HyperEVM is now live on Lazy Summer. USDC, USDT vaults, and HyperEVM. Aggregated exposure across Felix, Hyperlend, HyperFi, HyperBeep. Summer rewards, HyperEVM points. Hyperliquid is the place to be. Gentlemen, thank you for joining us today. Best of luck on the big launch upcoming. I know you guys have a lot cooking.
Congrats.
Thank you so much.
Thank you.
Been great being
here.
See
you again soon, guys. See you next time. Cheers.
Alrighty, boys and girls. Grant from Blockmates, the founder of Blockmates 2026 prediction, theses, and more. Man, oh man. I
hear Grant's got some spicy takes coming up that
I think he does, man. I think he is ready to get fired up. Man,
let's go.
This stream is ripping. Tom Lee, BitMiner. Guys, we will be going live with the shareholder meeting after our next guest. We have two more guests, then Tom Lee's coming on the stream.
Two guests, then Tom Lee.
Yeah, exactly.
Tom Lee will join us from the shareholder meeting. I wish he was phoning in himself. We're going to watch the shareholder meeting. We're going to bring you guys face to face so that you can hear it live and understand what is happening, because really the fate of ETH hangs in the balance.
The fate of ETH. The fate of ETH. The fate of ETH and Mando's giga-long position hangs in Tom Lee's hands and MrBeast now. I saw a tweet, I think, from Thread guy who was like, MrBeast just got paid $200 million to be an ETH cheerleader. Absolutely insane runaround of events for MrBeast over here. Guys, let's get started. We've got our boy Grant from Blockmates. He's going to rip us 2026 predictions one by one. We got about 25 minutes with our boy Grant. Then we got Ismail from Lagrange on AI Supercycle, and we're going to parlay that right into Tom Lee's shareholder meeting. We got a lot going on here today. If you're here waiting for Tom Lee, guys, hit the subscribe button on YouTube. The chat is available. We are reading the chat from you guys. We will ask the questions that you guys want us to ask. We are on the chat. Guys, if you're watching on YouTube, hit the subscribe button. We are live every day. We have huge news coming from New York City in a couple of months. We've got more streams. We've got great content all week long for all of 26. Guys, if you're on Twitter, hit the follow button, hit the like, hit the repost, show us some love. We're going to get Grant from Blockmates. He's going to take us through his 2026 predictions. I'm stoked. Let's go.
Let's bring him up.
Our boy is ready to go.
There
Grant.
he is.
How you doing?
Welcome. You're
Thanks
live.
for having me, gents. Yeah, thanks. Sorry
Thanks,
to
yeah.
bustle into your DMs asking for a request. Yeah, being
Cheers,
told
man.
off.
No, man. I mean, if it was a bearish market in the beginning of the year, we'd probably say no. But now that we're back to the bull market, let's fucking we're on, boys. We're on.
We're back again. It's crazy how sentiment turns around, isn't it? After like 5% move.
Literally like a move from 90 to 95 changes it all. Man, this is going to be our last predictions episode of the year. So we're stoked. I know you guys have a ton of theses that you want to share from Capitol Hill, from MetaDAO, from Robinhood, general purpose chains, robotics, crypto cards, neobanks. We're pioneering this Neo Finance idea. Hope we get some time to talk about that. But Grant, maybe just kick us off at the highest level, man. What is your most broad, holistic prediction for 2026? Take us through. Excited for this one.
It's weird. We start getting into different sections. We've got 3 writers on this, myself, 563, our head of research, and Kai, and we keep tripping over each other because everything seems to come back to the point, and I know you guys know this as well as anyone, that the industry has grown up, but we're at the point of where the end goal was never really unclear, right? For this industry to succeed, it kind of just fades into the background and merges into everything else. It just becomes one with tech and AI and finance, and that was never really unclear to me. But what is probably keeping people a little bit more jaded, what we've seen over the past 18 months, is the industry as a whole is succeeding better than ever. Clarity across the board. Like the acquisitions that are going on is absolutely insane. But what isn't reflective of that is the token side. So nobody's making any money, but yet the industry is in this weird dynamic that it's succeeding really, really well. So everything comes back to, and it's going to be like a weird thesis to share because it's just this constant recurring theme throughout the whole paper, which is tokens need to change, right? So the idea is we're going to have extremely profitable businesses, and some of the most efficient businesses on planet Earth, apart from OnlyFans, are crypto businesses, right? So it's perp stexes, it's token issuance, it's degenerate casinos, and they are revenue per employee, most efficient business on the planet, right? And you can't overlook that. Again, getting back to the point of the tokens not really reflecting that in the market. There have obviously been some outliers that have did well, and that correlation between fundamentals and token price has existed. But I think we're at this point with like the largest dislocation between positive fundamentals from an industry and from a company and from a project perspective, and what that token is reflecting it as. So I think we see one of 2 things. You either just get profitable businesses that just say, thanks, but no thanks, we're not even going to have a token. I don't want to have to sit in Discord or Telegram and have some NEET who's never been employed, doesn't know how to run a business, tell me I need to do some more marketing. Not interested in that. We're just going to not have a token, right? And you're a profitable business, so why the fuck should you? Like, that's cool. And then the opposite side of the fence, I think the market will start to demand that if there is a token, that it is actually tied to some investor protections. So when you hit it at MetaDAO there, I think what they were doing was stamp like this evolution of a safe and a SAFT, but then putting it on top of Futurarchy and have prediction markets to decide whether that outcome is viable. I think that's really, really cool. I still don't, and it looks like both your take on this, because it's something that I laugh at quite a lot, and you guys obviously run a very, very successful business. I don't think there's any landscape where people who think about this all day, every day, and it's all consuming for someone, as you guys know, running a business, every little decision, whether you want to change the hex color on your fucking logo, for God's sake, should be put to like a futurarchic vote or governance. It just doesn't make sense to me whatsoever. Like boards in the real world, like how the real world operates, if there's a dispute resolution that needs to happen and it needs to go to a vote, that's when it happens. If you want to change the fucking header on your Twitter profile, that shouldn't be going to like some weird governance vote where there's a lot of theater that goes on, and there's a lot of weird backhand kind of lobbying that kind of goes on in Telegram groups and stuff like that. So I still think founders should have drastic control until it starts to look like the wheels might be falling off, or there is like a really, really, really drastic decision that everyone really can't agree on. So I think SOAR, and MetaDAO are doing a really, really interesting thing. I think Street Foundation are doing something really interesting. So those three are trying to solve the problem by coming out with different solutions. But again, the recurring theme throughout all of this, which people will see when we release it tomorrow, is what to do about tokens.
No, I mean, completely. And we had the framework guys on last week, and they were talking about how finally now the SEC Innovation Hub in the States is now open for business, meaning it's not like, hey, you're going to get absolutely subpoenaed and ridiculed for coming to us if you bring us if you bring your project to our attention. It's more of like, okay, we're willing to work with you on how to structure these tokens. And so I think like 2026 is firmly the year of knowing what you're buying, knowing what claims to ownership of equity or token that you have, the unification of these, and just really getting transparency and clarity into what you're buying. And I think that is like the massive, massive token trend to expect this year.
I think there's probably some teams with tokens that are already in existence that might have a reasonable amount of the supply still to come online that might actually look at it and try and retrofit some direct equity with the remaining tokens or some tokens. The only reason I'm not doubling down on that idea is I think there's a lot of founders that have got incredibly rich at a very early stage of their product lifecycle and their company lifecycle, which wouldn't necessarily happen in the real world. They'd have to wait till they got acquired or gone public. That's kind of like arse backwards in this industry. So some teams might just be sat there and saying, why the fuck would we need to do that? We've already got the bag. But I think there will be teams that want to do it the right way. And if they do lead by example, I think the rest of the market will reward that. And I don't think people will put up with anything second best to that, if that makes sense.
I like it. I agree.
I think also, yeah, and I think also as the tokens and the crypto companies that do go public, as they integrate deeper into this legacy financial world that is accustomed to equity cap tables, doing things a more traditional way, they will resemble equity cap tables more. And it's so funny, Grant, to hear you say, like, in the real world, this is how they do things. It wouldn't normally go like this. It's like, yeah, like, are we not living in the real world? Like, where are we, right? But real world asset, like, I think that was always it was bound to come to an end at some point. You can't live in a bubble like, your whole life. And so it makes sense that now we're kind of realizing this and becoming more integrated into the real world, and things are going to have to change. Things are going to look a little bit differently and resemble a little bit more of the legacy financial space.
And then, the token prices will be there's going to be this further concentration effect of winners, like, the Magnificent Seven, call it like the Magnificent 10, 20, or the Magnificent 3. I mean, we'll see kind of like how that structures, but I think it'll be those ones that have this clarity, this transparency that will win. All right, Grant, moving on from this big privacy take here. ZKTLS enabling new applications on chain, maybe FHE, Ethereum leaning into privacy heavily. We've seen Monero pump. Arthur Hayes is so bulled up on Zcash. What is the privacy thesis? We've seen Near Intense, Starknet, Solana just had this weird beef thing that they just did on the timeline. Clearly, privacy is on people's minds. What is Grant's privacy thesis for 2026?
Yeah, I think it's a culmination of a lot of things. I think the Zero Knowledge teams and ZKTLS teams and even the TEE teams and the FHE teams, not to put too many acronyms in my mouth at the same time. I think that tech is starting to become extremely viable now. I think you've seen Vitalik greenlight a lot of what we've just previously mentioned there. I think a lot of the more legacy ZK teams are really starting to come in their own, probably started looking relatively similar at the start. And now they've branched off into relatively different directions. So you've got Lighter showing what's always good is like showcasing a piece of tech as opposed to just telling people how good it is. And I feel like they've done it really, really well. All at the same time of absolute saturation of crazy geopolitical situations happening near enough every day now, right? It's like, it's crazy situations that are extreme headlines that just get dropped onto the feed every single day and now not even feeling like crazy, like how, like the magnitude of that news headline in and of itself, because it's so saturated, it's just like second nature. And it's just, that's just the situation the world's in currently. So I think it's a weird kind of whirlwind of events where the tech's meeting up with like an extreme backdrop, a lot of fear in the world. And at the same time, like the previous conversation that we were just having, the disconnect between tokens and fundamentals, I think the privacy sector, I will refuse to call it like a privacy matter because I think that's fucking stupid. I think it's a human right. Like it really should go as far as that. But at the same time, because there is that much disconnect between what crypto used to be, where it's moved in this current direction, I feel like people want to actually buy into something that they can truly tangibly believe in again. I think that is the kind of essence of what the industry started on. And it's like people clinging on to something that is definitely valuable, definitely viable. And the tech is also like coming into its own where it's starting to back it up as well now. So it's like the philosophical meets the ideological, and at the same time, the fundamental on the political and geopolitical backdrop. So a lot of things all boiled into one. It just feels like the right time for it.
It's funny that Monero is ripping the token for the assassins and the criminals, while Zcash is like trying to work with the SEC and just can't catch a bid. And such is the way of life.
It's funny, like there's so much just intuition baked into these things when the mass and the crowd start following in. Like,
right, but there's Monero also the OG thing though. Like the three of us know like the Monero Zcash backstory. A lot of people don't. You know what I mean?
Monero was 51% attacked in August of last year. The IRS has a back door. It's not really private. Like, what are we doing here?
Yeah. I love that. I love that. You can add our boy Arthur to that list. Shout out to Arthur. Hopefully you come back on the pod. Next one, general purpose blockchain valuations come back to life or come back to earth. Tempo, JPM chain, Robinhood chain, Commonwear, not dead, but not 12,000 times earnings. Santiago coded versus Hasib. What's your take here on L1s? Sui went down for 2 hours yesterday, and I think it took the market the entire 2 hours to realize, probably a sign of the times. Where are we at here on L1s?
Through pure market frenzy, that there wasn't even enough demand for general purpose block space across Solana, Base, and maybe a couple of other flavor of the week's chain at a time. So I believe that for current demand, I feel like we're at general purpose saturation of all we would typically need, particularly with performance getting commoditized across the board. What I will not throw out with that statement at the same time is I feel like we're already starting to see, and it's kind of ironic that like Cosmos was directionally correct from the start. It's just that it didn't maintain relevance long enough for people to think, oh shit, this is where the industry's heading with app specific or like really hyper specific from the ground up networks to, still be around and be top of mind when this kind of new wave's actually coming over. So Hyperliquid showed the playbook. I am still a bit in two minds about what happens when an application gets really, really successful on a general purpose chain. It feels like the inevitable next step would be to go app specific chain. I think Polymarket probably launches its own network, and they want to own that full stack. They don't need to be paying rents to any other network. They're, well, the best app in the industry currently. So I feel like you see more and more app specific chains as like a equal and opposite reaction to there being no desire to actually go and build another general purpose chain. I've seen GTE move away from wanting to build on top of MegaETH to going to build their own specific chain. I think that trend continues. I do think you do need to find some level of product market fit before you go down that route, because building a chain is really fucking expensive. So I think the winner, if that is to play out in theory, is probably Patrick O'Grady's new company, which he was the ex-engineer at Avalanche, so probably no better person in the full industry to kind of say what a chain from the ground up that's hyper specific should be built on. And they've built Commonwealth, which is a framework and like hyper customizable from the ground up. Tempo have adopted some of its frameworks. I believe GTE might have used it as well, but I feel like that is going to be the catch-all of like, how would you directionally bet on that if they have a token, or if they don't, who's to know? Like the previous point was like, people like that, if they've got a successful business, shouldn't have a token.
Well,
so
exactly.
You can just sit there, watch the thesis play out, and not make any money off it again.
Dude, I like this next one about Neo Finance here. Crypto cards being the next major product market fit, but who wins? Probably a good opportunity to roll up dying apps and integrate a wallet. I saw Mike Novogratz put out a tweet saying that centralized exchanges and some wallets are going to shift towards more of a neobank structure as well. Kind of create this onboarding product. We're calling it Neo Finance. What's your take here on this like Neo Finance category, crypto cards? How do you see this neobank growth playing out?
Yeah, I mean, you guys have been like banging this drum, so I'm glad to be in good company on it. But I feel like the pillars of like true product market fit, what we spoke about, like some of the most efficient businesses on the planet, like revenue per employee, it's perpetual exchanges, it's issuance, whether that be stable coins, or I think you will start to see like huge issuance providers, maybe like Securitize and people like that doing extremely well, but not just for dollars. Pump.fun, the greatest casino ever created, launched a coin. So it's a similar sort of thing. Issuance, speculation, anything that can be a picks and shovels play around that. And then I feel like the next drastic category that could fall into as something as of large of a magnitude of that would be as what you guys are calling it. I think Neo Finance, and I think cards are ripe for that taking. Like the June boards on all of them are up and to the right. What I will say is there is quite a lot of incentives being pumped out for a lot of these cards. So like 10% cashback I've seen on some of them, and someone has to lose out on there. Like there's a token getting extremely highly inflated by in the process of doing so, using it as a customer acquisition cost to get people on. I don't personally think the moat or the winner is the person who can pump out the highest rewards, because we've seen time and time and time again since early 2020, people move on to where the largest reward is. I think it comes around hyper-specific exclusive rewards. Like how many conferences do we go to between us, like on the ground activations, getting into cool clubs, getting into cool restaurants, getting into places that you can't get to unless you've got this specific card. If you're already fucking rich, you don't really care about like the 1% and 2% getting dropped back into your wallet of like some hyper-deflationary L2 token. You're probably never even going to realize it anyway. It's just it's more of like a social symbol. It's an accessory. It's what you want to be seen with. You want people to ask, what's that, when you're paying for something, when you're inevitably picking up the fucking tab at the end of the night when everyone's been drinking on your bill. So those are the people I think will win. I think Phantom has an unfair advantage because they've already got distribution. I think anyone, again, who can lean into the more cool lifestyle aspect of it will probably have like a really nice cult following, but the wallet providers have got a very, very, very good head start here, I think.
I like it, man. And I think the centralized exchanges do too. As far as their customer base, their grip on their customer base is very strong in terms of it's kind of like it's already their one-stop shop. And we saw Bybit roll out Mantle's your app. Kraken has just rolled out their Crack neobank app. Coinbase now has Base app and like Coinbase wallet. So between that and then Phantom, MetaMask, etc., I think you're spot on here. last couple ones here. More mergers and acquisitions / rollups happen due to teams with interesting products not seeing product market fit quite yet, but could make an interesting business. Talk to us about this one. What does this mean?
This is kind of an extension of that previous point. So I think the recent Revolut raise announcement, which previously in like 2016, just to put this into example, what we're talking about like extremely overly inflated crypto companies and prices, Revolut were raising at like 46 million pounds or something. So that's what, 50, 60 million dollars at the time. There was enough meat on the bone for every, and that was crowdfunded as well, by the way, on some like 2-bit crowdfunded platform in the UK. So there was enough meat on the bone for that to happen. Now they've just raised at a $75 billion valuation. So I feel like everyone's having a little look at that and being like, we've got the distribution, we've got the financial product, we've got better savings accounts that we can offer, which use up yields from DeFi. I think everything trends towards looking pretty similar. So I'd look at Aave and be like, they actually have everything that you need to replicate something like what's going on with Revolut, where I just put into my savings account. I don't really know where the yield's coming from, but I've just got my savings in my cash account just sat there. Maybe there's a card attached to it. There's premium perks built off all the back around it. But I think these companies that already have lindiness, they're already established, they're already extremely profitable. They haven't tried to fund operations by just selling tokens. Those guys are probably looking around now at the million different chains that launched over the past 2 years, where they had where these networks had championed these teams and these applications, where they're supposed to be flagship perps dexes, money markets, spot dexes, stable swaps, like any flagship product you could think would be a staple in a DeFi ecosystem. I think those now are at extreme valuations where you could go and just pick them up, scoop them off the floor, acquire the team, acquire the IP, bundle them all up, and inherently just have like a much higher valuable product. Starts to look much more like a DeFi suite and kind of feeds into what you guys are saying with the neobanking kind of thesis at the same time. I've seen some apps recently over the past week when I've been going over to faraway chains, start at like $1 and $2 million market cap. I have no idea what the equity attached to that would be valued and worth, but they're incredible products and great teams that have built them from the ground up. And I feel like because they've chosen to deploy on a network that isn't really getting any love or attention, I feel like they're ripe for acquisition and mergers. I feel like there's a bit of a talent leakage that's gone to AI as well. So any teams that are still sticking around that are building in the space, I feel like could get brought under some wings, and we will see more of it. The problem is, which people won't really want to hear, is when these mergers and acquisitions happen, similar to the Axelar one with Circle the other day, the big boys will not put up with hyperinflated valuations. Everything will have to like be in line with the real world. So if you've got no users, but you've got a brilliant app, it's like, who gives a shit? This is what you get in, take it or leave it. What are your other options? You're just going to continue to sell tokens onto the open market for the rest of eternity. Well, your tokens are 3 million market cap, so you can't actually do that. So I feel like there's going to be a lot of that. I feel like a product suite is better than just a standalone product. And again, I feel like it feeds back into what you guys are saying about like neobanking and neo-finance.
Yeah, it's just this convergence of legacy finance and DeFi. There's kind of two enemies here. There's the enemy that is what we're talking about here with this lack of structured tokens, governance, DAO, Fugazi, decentralization for the sake of it, for regulatory arbitrage, high FTV, low float, infra slop. That's kind of like enemy number like 2. I mean, it's kind of enemy number 1 and 2, and then enemy number 1 is like just like traditional finance. It's like, we're going to tokenize everything. We're going to bring it all on chain. Like, so it's like, I think it's emotionally driven, and like all the logical reasoning that you're explaining here drives directly into like what we're seeing as well. So it's good to get some confluence here from you. Last one. Yeah. Rob.
Yeah. I'll just quickly say on that, the enemy in general is just the old way of doing things. Like
correct. Both in crypto and outside. Yeah,
exactly. Go ahead.
Last one, Grant. Robotics ? Is this the year of crypto robotics? Is there any investable crypto robotics tokens right now? Like, I have not bought a single one.
I got a sleeper.
What's going on here in robotics?
I'll let Grant go first.
I haven't really seen. So to kind of like round off everything that we said, and this is like a great sector to ask this question on. I don't inherently think that I've seen, I could be wrong yet, and to caveat that, any company that benefits more by being on crypto rails in the robotics sector just yet, right? I think if I was to think about like what you'd build to actually satisfy that niche, I think there's going to be a complete lack of spatial data and spatial information that robotics sector needs to actually thrive. I think everyone's got a really, really good device that lives in the pocket and it's like basically attached to the hand all day, every day in a mobile phone with extremely good cameras that could be used in some weird sort of deep in network where you could be incentivizing people to go and capture spatial data or different types of data sets that are like visual, audio, photo, video, anything that robotics or robotic LLM AI models could actually be trained on. I don't know if that's existing. I don't know if anyone's doing it well enough. We all know really how a majority of deep in projects have played out. Can you fix that by, instead of people just dumping what looks like food coupons onto the market as the reward for doing tasks like that, could you then tie it back to tokenized equity, and then you'd kind of think twice about actually selling it on the open market once you realize the rewards for doing the task from said deep in product? So I haven't personally seen anything. That's why we haven't went too far into detail, but it's the worst kept secret ever. Like the robotics sector is getting so much investment. It's absolutely insane.
I mean, Rob, did you have a sleeper for us?
I do. Andy, I'm surprised you don't remember this one. Again, not financial advice, do your own research, but
here we go.
We had
that's a good primer, bud.
We had Arthur Hayes, the Arthur Hayes, right? Obviously, BitMEX liquidated all of us. He
Dude,
came on
caused me depression, bro.
With this guy Nils, and Nils is the founder of Auki, and AUKI, and these guys, and he came on, and in his background was a physical robot, and he explained the benefit of turning this physical robot into a DPIN network. Is every time you load this thing up, you load up a smart contract from the Ethereum network. And so this DPIN network is effectively like this mapping of the real world. And they put this together by basically decentralizing the entire robot cluster. And then everything is able to coordinate and transact with one another. And not just transact in terms of commerce, but transact data and share the perception of the robot, like what it's seeing, its view of the world. You know, is there a building here? Is there a road there? Traffic light, stoplight. We've all do the captchas. And so they're able to like transact this different robotics data with one another by blockchain. And so,
Rob, I don't know if you saw the latest all-in pod with our boy, what's the guy who always talks about Uber, Kalikanakis. Dude, I invested in Uber. Yeah,
first investor in Uber.
Yeah. That's gonna be me with Pudgy Penguins in 5 years in Plasma. I'll be like, but I was an early investor in Pudgy Penguins. Dude, Anyway, he gets on stage and he's like, dude, I went to Tesla's headquarters in Austin or something, or in California. I think it was probably in Austin. Sunday morning, 10 a.m. There's tons of people working. I walk in to see Optimus 3 and I'm mind blown. There's going to be 1 billion Optimus 3 robots. With the power of LLMs and spatial reasoning now, they have the ability to interact in the world. I think there's going to be one robot for every human in the future, and people are underestimating this. Tesla is no longer going to be known, or is in the future will not be known as a car company, will be known as the company which created Optimus, the fucking robot. Your robot girlfriend, Rob, finally. What you've been waiting for.
What does that have to do with crypto and blockchain?
I'm just giving you the bull thesis, man. Grant, last thing for you. This is what everybody wants to know. Where are we going to end price-wise end of 2026? Is it going to be a positive year, negative year? We had Hasib on right before the new year talking about 150K Bitcoin by the end of the year, regardless of what happens mid-year and intra-year. What's your take? Where is the market going this year?
Yeah, I think we'll be a lot higher than here.
I still
think there's a lot of non-believers, and you won't catch me with these rallies. But I feel like there's, when you just get a gut feeling that there's like the weird hive mind that happens in this industry, and people are like starting to put risk on again. Starting to feel good.
Beautiful, Grant, man. Always a pleasure. Thanks for coming on.
Thank you so much.
Take it easy. Keep up the great work. I'm sure your growth on the biz side has been pretty fucking strong, like ours. So I think we're in our hockey stick phase here of the brand. So let's keep flooring it, dude.
Absolutely. Thanks a lot, gents. I really appreciate it.
Cheers, mate.
Thanks, Grant. I'll see you next time, man. All
right, man. What a good segment there.
We're ripping through. We're ripping through. Let's do a quick commercial break so that we can get set up for AI Supercycle, our weekly AI segment sponsored by Near. We're going to be right back. And Ishmael from Lagrange. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at Trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Money shouldn't wait for Mondays. Following its Rio upgrade, Polygon is now one of the fastest chains for stablecoin transfers and payments. Visit Polygon Technology to learn more.
Kalshi is the world's largest prediction market. You can trade on anything in all 50 states. Go to Kalshi.com to trade today.
Talk to AI like your lawyer or your doctor or your therapist. Yours, private, and here today. Visit near.ai to have a fully private chat experience.
Havachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
Looking for yield that stands out? Infinify gives you just that. Deposit stablecoins and earn far more than the current savings rate. Infinify is a battle-tested, reliable DeFi platform that is ready to go. Head to infinify.xyz.
Halliday is unified crypto payments. Give your users more wherever they are. Go to halliday.xyz to never write a smart contract again.
Welcome back to AI Supercycle, our premier AI show, airing every single week, presented by Near. We cover the ins and outs of decentralized AI, privacy, and the future of this massive technology.
Near is the blockchain for AI and the execution of AI native apps. You can check out Near's latest AI product at near.ai. Now sit back, relax, and enjoy the show.
Welcome back to AI. Alrighty, guys, welcome back to AI Supercycle, episode number 16, our weekly premier AI show powered by our friends over at Near, crushing with their Near Intense products. They're also their private Near AI chat product, one of my favorite ChatGPT chat products, esque product. So, Ismail, welcome to the show.
Andy, Robbie, thank you so much for having me back. Love being here always.
First show of the new year with our friend Ishmael. You were part of the recurring cast of characters back in 2025, and feels like we're just getting back to it.
Oh, I know. It's going to be a big year. We talked about everything from AI to ZK last year, and I think the AI space, at least, is not slowing down.
Yeah, man, it's definitely not. Man, catch us up.
Yeah, what's the latest?
What is the latest in this intersection between AI and ZK? I know that you guys are doing some interesting work with ZKML as well as just general defense work, which is also interesting. Catch us up here.
Yeah, so for everyone who doesn't know, Lagrange is a company that builds cryptography. ZK, FHE, consensus, everything that's required to make AI safe across dual use technology, both commercial, things like crypto, and now defense. A big part of the last 6 months was us taking our industry leading technology from within crypto and finding dual use applications of that with legacy primes, with up and coming defense companies, people like Anduril, Shield, and continuing to purpose that within crypto for tremendous business value.
And so my understanding of Anduril, I remember I saw the demo of the headset on Joe Rogan, and this guy was able to, you could see through walls. It was incredible. I can only imagine what, you know, was happening in Venezuela when we took Maduro, maybe putting some of that technology to work. How does the cryptography fit into the hardware? Ultimately, like, defense is a multitude of things, but where does the cryptography fit into the AI weaponry defense stack?
Yeah, this is a great question. So to take a step back, we've had a thesis for a while that the cryptography that's being developed and financed in crypto is light years ahead of what's being done in any other sector, right? We're the only industry that throws billions of dollars into research on consensus and ZK and FHE and all this stuff, right? Except every single company in crypto is only purposing this innovation into crypto. We've seen the broad variety of other sectors that the companies that can take something that's built in the private sector and purpose that dual use into supporting American warfighters have been able to have tremendous impact and have been able to drive substantial business value, shareholder value. And we believe that crypto is no different. There's an opportunity to take things in crypto that have secured AI in some of the most adversarial environments, right? Securing billions of dollars of assets across consensus, across ZK usage, and across AI agents on chain, and to purpose that to secure AI used in autonomous weaponry and defense relevant programs. And so this involves both hardware security, obviously, which is what exists today, and increasing security on model usage and increasing security over how autonomous assets can coordinate within contested environments.
So, okay, so the ZK element is important for these autonomous environments. Why? Like why is this property important for this specific niche?
Yeah, so assume that you have a defense relevant drone that you put into a battlefield environment, right? That drone has an onboard model or is communicating back to a command and control system that's running a model to coordinate what that asset does. The question is the right model being used? Has that model been tampered with? Has the connection been tampered with? Has the result that is that drone is going to use to make a kill chain relevant decision, is that coming from the right model? These are all very, very important properties when you use AI in defense relevant programs. Our thesis is that the cryptography that's been developed in crypto has a unique opportunity to secure that.
Got it.
This is fascinating. This is something that, because this is a combination of DPIN, but also ZK and some of the cryptography that we've talked about on the show. And so we haven't really broken into this. Was, you know, you've been in the cryptography space, you know, for a long time building Lagrange, but when did it dawn on you that, okay, we should be applying our cryptographic principles to this particular sector of the industry? How do you break into this category?
You know, I think some of the work and some of the speeches by, you know, Alex Karp in Technological Republic or some of Palmer Luckey's podcasts talk about this idea that you have a generation of companies, you know, the food delivery apps, the future of work things, the payment infrastructure, that effectively have taken the best American engineers and researchers and have purposed them to do things that are trivial, effectively small quality of life improvements for, you know, the top 10% in income earning in the United States. And so you can take that technology, and effectively companies like Palantir and Anduril and Shield have taken that technology from the Valley and have purposed that to secure and to build new defense programs to extend U.S. Drone and defense and AI dominance. Now, crypto is very much in the same position, right? What has the industry put $1 billion of R&D into ZK for, right? It's to launch more blockchains. It's to have more private blockchains. It's to sell more tokens effectively, right? Which is fine. People make a lot of money selling tokens. But there's an opportunity to take that technology and the exact same way companies like Palantir and Anduril and Shield have with their respective industries, and to purpose what has been built and financed in crypto into defense. I think the analogies are very clear, at least to me. But the question is, hey, you know, what team has the capability of doing it? We're a research company. We've been developing zero knowledge systems for the better part of 4 years. Fortunately, you know, or unfortunately, you guys have invited us on here for 4 years to hear us talk about it. And you know, I think the frontier of that is obviously continuing to apply this stuff in crypto to generate obviously substantial token holder value, as well as finding opportunities outside of crypto. And defense is one that is very, very important to us as a business to apply our technology to.
Yeah. So we're pretty big on the privacy part of AI in the show, and I was mentioning Near.ai, their chat product, which effectively is like a very private LLM chat product. When it comes to the privacy aspect of ZK, we've seen a bid on Monero and Zcash recently. You can't even call it a meta. These things have existed for so long. How do you think about the relevance of the private angle with the work that you guys are doing, as it applies to whether it be some of your decentralized prover networks, Deep Proof, ZKML, and then how that applies to kind of crypto, other industries? Like, talk to us about your personal and Lagrange's perspective on the privacy aspect as it relates to the ZK work that you're doing.
Yeah, I think you guys are ahead of the curve here as usual. The ability to apply privacy preserving technology onto AI is one of the largest unsolved commercial problems, I think, within crypto and outside of crypto. The reality is there's two questions in privacy I think are important. A, how do you keep the model private to protect the weights, the biases, the architecture, and all of the business relevant properties for the person who developed that? And two, how do you allow the data, the prompt that people are using as input to generate some inference result to also be private? And these are two separate problems, right? There's the business side of how do I make sure my IP is not stolen? And, you know, let's say you're in defense, it's how do I make sure it's not stolen by China? If you're in the US, it's how do I make sure my, you know, my LLM that I'm using to underwrite insurance data is not stolen by my competitor? And then the other side is how do I ensure that all of my personal data is private? And this is where things like ZK are so important. Deep Proof, our flagship product, is able to address both of those things, right? The first is you can run inference over a model that's verifiable while keeping that model private. You can ensure if you're a user that you're sending your request to, I don't know, Google Gemini, and the result you're getting back is coming from the right commitment to that right model. You also, using ancillary technology like MPC or FHE, on top of something like Deep Proof, you can add privacy on top of the input, such that the prompt you're sending is not going to be seen in, you know, plain text effectively by the person running that inference for you, which is great. You know, and it makes me feel nice and warm and fuzzy if it's my own personal conversations with ChatGPT. But when you talk about enterprise or business context, it's even more important.
And give us an update on the state of ZK, because for so long this was in R&D phase. It was very academic. We had to do hard math in order to, you know, get the performance to a point where it became useful as a pragmatic business solution. Where are we at today? What has the performance been like over the last few months? And do we still have more room to go, or is it at the pace and the performance now where, you know, if we need to prove every, you know, instance of where a drone is shooting, we can get that proof back, you know, within a matter of milliseconds in order for the drone to make a decision, or we're able to use it in chatbots at scale? Where are we at in the state of ZK?
Yeah, I mean, have you guys ever seen that chart where it shows effectively like the hype on stuff and it gets really high and then it goes all the way down and slowly rises back up again? That's what ZK was, right? For the early part of last year, and then definitely in 2024, the hype on ZK was so high. It was, we're going to solve everything with zero knowledge. Every blockchain, every rollup, everything in the world is going to be proven in ZK, and we're going to throw cash at this problem, right? And the industry, as we always do, got over its skis on it, right? This is what happened with ZK. And you realize, hey, this isn't as fast as we hoped it was. Even with GPU acceleration and custom chips, we're 3-5 years away from this taking over literally all compute. And we're still on that timeline, right? ZK is inordinately faster than it was a year ago, about an order of magnitude. And it's an order of magnitude faster than it was a year before that, an order of magnitude faster than it was before that. There is now a variety of commercial applications that ZK can be purposed for, and is being purposed for, things like defense, things like enterprise, and obviously things like, you know, cheap block space on chain that were infeasible 12 to 24 months ago. Now, can we prove every inference from, you know, Opus 4.5? Can we improve everything from Gemini 3? Can we improve everything from any major commercial model with ZK right now? Probably not. Will we be able to in 12 to 24 months from now? I believe so, right? We are approaching that point faster than ever before. And I personally think it's going to be one of the largest economic opportunities that crypto has seen when everything becomes effectively ZK-ified.
Yeah, man. I mean, I think that people are gonna want this like now. Like people want this privacy aspect now. They want ZK to work now. Has the progress of the actual technology in terms of the proving costs and time, has it significantly improved? Where are you at with like your latest 2026 benchmarks?
Yeah, so we've announced that we can prove Gemma 3, we can prove GPT architectures, we can prove a variety of open commercial models with deep proof that are large LLMs. Mostly what we've been running is kind of low 10-figure parameter models through our prover. And we can prove about 1 token per second right now. Which, it is not as fast as we think we will be able to in a year. We can assume maybe 10 tokens per second in a year and 100 tokens per second in 2 years. But it's substantially faster than it was before. I agree with you that people want things now. And that is why, as a business, there are use cases that are willing to accept latency and willing to pay a little bit more for verifiability, and use cases that aren't, right? If you are getting medical data and you want to ensure that it's private and verifiable so your patient doesn't, have a life-threatening adverse effect, then you're willing to pay for that, right? An extra, 10 seconds and an extra, $5 or $2 is not really going to make or break you. But if you're just vibe coding on Claude, we're not at the point that ZK is the right technology to just prove everything outright there, right? You don't really need verifiability. It's maybe a nice to have, but doesn't really matter. And so that's where we are with ZK for at least AI. Super impactful, super relevant for a variety of commercial use cases in high value sectors, things like defense, healthcare, finance, and now approaching on things that are much more consumery. When that's where I think the big frontier will be within 12, 24 months.
What has been the perception within the defense space when you bring them ZK? Are they cursorily aware of it? What has been, is there much of a learning curve? Because it seems to me, we used to, a couple months ago, we would ask, some of the crypto companies that were diving deeper into payments, they were going and pitching banks and getting adoption. It's like, okay, how do you guys pitch a bank DeFi? And they would kind of walk us through, where their learning knowledge, where their knowledge base was, and what other things they needed to get through and overcome in order to understand really the value proposition here. What has been the knowledge base of those in defense company, and how much have you had to overcome when you're explaining ZK?
When we first started talking to defense companies, a big part of my worry was they would not take us seriously, right? Very fortunately, we hired a fantastic lead of our defense go-to-market, who has a significant amount of experience. He's a military background and a defense GTM background as well, who's been architecting a lot of our defense GTM. But broadly, I was very concerned that we wouldn't be taken seriously because we're a crypto company. But it's a credit to the defense industry and the companies that we've spoken with that they're very willing to embrace new technology, right? The imperative is to win, to build the best thing possible and ensure that they can effectuate whatever type of mission outcomes they need to by maximizing security and maximizing the capabilities that are available to American warfighters. And there is an incredible willingness across both the Department of War, across DARPA, across government agencies, and across defense companies, both primes and the upstarts, to actually embrace things that are available. Almost all of them have cryptographers on staff. Are they working on things like ZK, FHE, consensus? No, not most of them are not. But they understand what this stuff is. They have cryptography backgrounds. They have very technical teams. They have research labs, and they're very willing to find ways to try to purpose this to see if there is the potential to augment and improve on the security properties of their systems.
Yeah, that is very interesting, Rob.
Well, I find it fascinating. I was reading about this last night and how, right now in the current administration, we're taking a more top-down approach. And Ishmael, you're absolutely right. Like, the objective is to win
Yes.
Period. And we've heard that from the highest level of the government. And so they've chosen particular sectors where we want to win. AI, defense, crypto is another one. Drone dominance. And so we know that there's going to be significant investment, not just in financial investment, but also time and energy and resources that are deployed in winning in these particular categories. And so you saw this, you allocated, more time into going into this particular direction. Where do you go from here? How do you think we continue to develop ZK adoption into defense, and then broadly, what are there other categories that you're tackling? You guys all in on defense, and if so, where does defense go from here as it gets more implemented?
Yeah, so this is a fantastic set of questions. We're a dual use company, right? So our ZK machine learning technology, Deep Proof, is valuable across both defense and commercial. So we have a bunch of commercial partners across enterprise finance, across healthcare, across enterprise AI, and then we have a bunch of folks that we're working with in defense. We've announced that we're a part of supplier ecosystems with some of the largest primes, and we've demoed open integrations with a variety of defense SDK environments. And there's a bunch of stuff we can't talk about because of NDAs and obviously other types of compliance requirements that are in place in defense. But we're very, very excited about that category as one of our principal expansion areas over the next year. Now, where we go from here, I think that there are other problems in defense that are adjacent to zero knowledge proofs that also have tremendous commercial opportunities. Things like teaming and swarming, right, in contested environments is very much, in our view, a consensus and BFT problem, right? You have 10,000 drones, they don't have an operator link, and they need to be able to coordinate a mission outcome when at any point in time, K event of those could be shot down or compromised, right? If I said, hey, I have 1,000 nodes and I want to make sure that a bunch of them might be taken over or bad actors, and I want them to reach an agreement over what to do, you tell me consensus, right? That's how we think of it in crypto. But that's an open problem in teaming and swarming for defense. And that's an area that we as a business are taking some steps into right now.
Love that, man. Curious from your perspective, what you think the blockchain kind of intersection here is at play, right? So kind of thinking of this AI crypto category. Again, it was late 2024. We had this agentic kind of Twitter account phase that really ran this year, or this past year. It kind of came back, but hasn't really came back. Like when you're thinking about in the context of this kind of AI ZK proving privacy lens, as well as these kind of extrapolated categories being defense, drones, etc. Where do you see the most applicable blockchain or use cases for blockchain? We even had a bit of a robotics thesis conversation earlier with Grant from Blockmates about 2026, and he kind of said look, I'm yet to really see how crypto rails are going to improve anything in robotics. How do you see this growing kind of physical and digital space with regards to AI? Obviously, the ZK side, the privacy side, the proving side. Where do you really see this intersection happening? What is that going to look like? I think a lot of investors really want to allocate to this category. They look at Big Tensor, maybe they look at Lagrange, they look at some other assets. What are we looking for from the investor perspective as far as where the real use cases for blockchain, what that kind of transition looks like? Give us a bit of lens from that perspective.
Yeah, the taxonomy I like to use here is that blockchains and ancillary technology that's financed within the blockchain space are security technologies, right? It allows you to apply new types of security properties on top of, effectively compute, right? You're able to provide verifiability with ZK in some aspects of privacy. You're able to provide privacy with FHE. You're able to provide resilience and liveness guarantees with consensus. And cryptocurrency is a mechanism for payment, right? It's a mechanism to transact and to store value effectively and account for value. And so the answer to where you're able to find value in the intersection of AI and crypto just comes down to where do you need efficient payments and where do you need security or privacy. And so where I see those things being is the application of AI in enterprise contexts where there's not counterparty trust. That's where security becomes very valuable, right? There's no counterparty trust across large swarms of AI systems used in defense, right? That's the zero trust properties in defense. So it's useful there, right? There's no counterparty trust between a large hospital and potentially a closed source LLM provider who doesn't want their data to be mined. Great application of blockchain technology. And where do you need payments? Well, for large scale agent coordination. I think that's going to be one of the most natural use cases for it. I think a little bit of this also data aggregation and data collection is another fantastic use case, right? How do we allow mass payments for data across, thousands of heterogeneous countries or hundreds of heterogeneous countries and tens of thousands or millions of heterogeneous actors? Another fantastic use case. But I think what it all boils down to is, where do you need efficient payments and where do you need augmented security and privacy?
Ishmael, last thing from my end is, just where do you think we are 2026? If you're looking back at the end of the year, any predictions in the defense space, the ZK space, or crypto as a whole? What are you most looking forward to this year? And yeah, any closing thoughts?
What I'm looking forward to is seeing smart people tackle hard problems. The big issue that crypto has had, specifically towards the early to mid part of last year and definitely in 2024, was very, very smart people tackling things that were not very hard because it was profitable to do things that were easy. That's not compelling, and that's not a good use of intellectual capital. We're seeing within traditional tech a shift away from building food delivery apps and Slack clones and SaaS wrappers into people solving hard problems: drone dominance, hypersonic missiles, nuclear fuel, things like this, rare mineral refining, domestic semiconductor production, right? And we're seeing that same trend in crypto. People who are raising capital to do things that have substantive value, things that generate revenue. There's companies that are doing energy infrastructure. There's DePIN doing wireless networks. There's companies like us that are focusing on that intersection of defense, AI, and crypto, or crypto infrastructure. This is the type of thing that I think will have substantial growth this next year. The easy money has been flushed out post 1010, in my view. What's left is allocators who want to deploy directionally into things that have real fundamentals with the capacity to generate meaningful long-term returns.
Yeah, man, we're calling this Neo Finance, this intersection.
I love it.
This, yeah, good. Honestly, the reception's been bullish, so I'm
Really?
pretty excited. Yeah, we're calling this Neo Finance. It's this intersection between legacy finance and DeFi. It's kind of got multiple enemies here. It's just really all about what's been done in the past, whether it be within the industry or just like kind of legacy finance and the way that works. Closing out here for the AI ZK category, what are some of the teams that you've seen pop up in the last six months, really, or even more recently, whether you're partnering with them, teams that you're excited about in this AI crypto space, or in the ZK and defense space that you're working with that you can talk about? Give us a sense of like where we should be paying attention in this sector.
Yeah, this is a great question. I would say that, to start with, the amount of risk financing that's moving into ZK and cryptography is an all-time low, right? There's very few early stage companies we see raising with ZK anymore. It's almost all the incumbents. With the AI x crypto intersection, we have a lot of great partners there who I think are fantastic. I think Sentient's an amazing team. I think our friends at Mira are a great team. I think, I'm trying to think who else. I think Aether is a great product. I think a lot of these GPU marketplaces are interesting. OpenMind, I think, is a great play on the robotics side. All of this stuff I think is very exciting. Now, in defense, I mean, there's just almost too many companies to name, but I think a lot of the work with Anduril and Shield kind of at the top of the space is really, really good. I think some of the work with Archer is doing with like eVTOL powertrains, like they were using in Anduril's Omen drone, is also very exciting. Obviously, they're a dual-use company. They're also doing commercial, but we like them a lot. And then I think that there's a lot of work being done in defense for low-cost, easy-to-produce, domestically produced military equipment. Things like cheap mass production of drones, the US's answer kind of for DJI drones. And I think that's an area that I'm very excited about, right? There's this interesting cost trade-off in defense that I always like to talk about where, if you have to spend $1 million to shoot down a $1,000 DJI drone, you really are not going to win long-term because you can saturate air defenses very fast. It's an economics problem. And so this is why you need to be able to produce large-scale domestic armaments that are low cost. Things like Anduril's Barracudas, These are, obviously, I think 200,000 a missile, and way, way cheaper for shooting down low-cost armaments or low-cost sorties.
Wow. Well, thanks for that, man. I hope the investors that are listening, that are interested, are able to check those out. Ishmael, congrats on the great work with Lagrange. Guys, this has been our AI Supercycle episode 16, powered by our friends at Near, the leading private AI chain in crypto. Ishmael, thanks for joining us. Guys, we'll take a quick commercial break, and we've got BitMine's 2026 annual shareholder meeting live on the Rollup TV next. It has officially just started, guys. We're gonna take a super quick break, and we'll be playing that for you guys live. Stick around. See you guys soon.
Thank you, guys.
Thank you, Ishmael. I'll see you soon, man. Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at Trezor.io.
Go anywhere on chain instantly with Relay.link. Relay is closing in on $10 billion transferred. Go to Relay.link to bridge your assets now.
Guys, the moment you've all been waiting for, BitMine 2026 annual shareholder meeting is live on Rollup TV. We are about to kick it off, guys. We're going to be going full screen. If you're here watching on YouTube, we are in the chat. We are checking it out. If you're on Twitter, smash that like button, hit the retweet, let people know Tom Lee is about to get on, and the verdict of the shareholder vote is going to be announced, which will have an impact on the price of your favorite asset, not only just BMNR, but ETH, which is sitting at 3297.5 right now. Guys, the shareholder meeting is on standby. It's not quite started yet. We will be playing it directly when it does. Rob, what do you expect from the BitMine shareholder meeting today? Any surprises that you expect from today?
I think the biggest surprise was Tom Lee buying $200 million of Mr.
Yeah, you got to think he's going to comment on that, huh?
No one had that on their bingo card. So I think we're gonna get an explanation. And like I said earlier, I think all we've heard up until this point has been theory. And so I'm curious to hear it directly from Tom Lee about why he made this transaction and also why they decided to announce it the same day as their shareholder meeting. It feels like, they're trying to get people excited. They're trying to make a lot of noise, get people out there to vote. Remember, a lot of times when it comes to the votes that they're holding at this meeting, the issue is not getting an acceptance, getting more than 50% of the people to vote yes. It's actually getting enough people out to begin with. They oftentimes don't meet the minimum people required and the minimum votes that are required in order to effect a change. So even if it is an overwhelming positive result, you need to get people out to vote. So I'm looking forward to the vote. I hope a lot of people do end up participating, and I'm looking forward to an expectation or an explanation as to why BitMine is participating in Beast Industries.
All right, guys, we're going to pull it up. It's ready to go. And we are going to get started. The stream will begin very soon.
Man, the myth, the legend, the only one, Thomas J. Lee.
Joining us right now is FundStrat's Tom Lee.
Tom Lee?
Oh, yeah.
Tom Lee, ladies and gentlemen.
Tom Lee.
I think you're a guiding light, Tom Lee.
Everybody wants to be Tom Lee.
From trading floors to global stages, Tom Lee has been traveling the world, breaking down markets, crypto, and the future of Ethereum.
Ethereum is the future of finance.
City to city, stage to stage, BitMine isn't watching the future, it's building it. Buckle up. Tom Lee is on the way for the ride of your life with ETH.
Dollar dominance is going to be the opportunity of Ethereum. BitMine has over $12 billion worth of Ethereum. BitMine is on a mission to become one of the largest crypto treasuries in the world.
Everyone loves a good Tom Lee price target.
This isn't momentum. It's inevitability.
Ethereum is the base layer of the future financial system.
I'll be coming up hot for a minute.
Guided by the alchemy of 5%, Ethereum as the core treasury.
Ethereum to me is the new Wall Street. The more Ethereum that's accumulated, the more secure the network is.
Tom Lee, from your lips.
Made in America Validator Network, Maven is coming. Staking, decentralized finance, compounding by design. We are bringing these to you right here in Las Vegas. Welcome to the BitMine shareholders meeting. Introducing Tom Lee. And now, please welcome BitMine Chairman of the Board of Directors, Tom Lee.
Well, welcome everyone. That was quite an introductory video. And it's my first time seeing it because Marcy wanted to make it a surprise. I've got a presentation, but before I dive into it, I just want to make some sort of opening comments, especially because those on the live stream are just hearing us begin this. So first, I do want to recognize the folks that organized and put this shareholder meeting together in Las Vegas. So that's Marcy Simon of Agent of Change and her team over there. At the end of this sort of programming content, Marcy will come on stage and explain some of the other fun things that are going to follow the formal presentation of some of the content. I do want to recognize several constituents that are behind BitMine. So I'm going to start with the board of directors, which if you can all just stand up at once. If you don't mind, there's going to be 7 standing up. Okay, great. Board of directors. And I'd like to recognize those from BitMine's executive management team. So everyone who is from BitMine, please just stand up. Great. I'd also like to recognize some key partners for us. One of them is Mosaics Capital, and if there's folks from Mosaics here, if you could stand up, I believe there should be a couple. I see some hands waving in the back. Yeah, okay. Of course, our outside counsel, Mike Blankenship, and the team from Winston Strawn, they've been critical partners as we forge as a crypto treasury. So Mike and Mike was up here with me earlier, but where's Mike and team? They're back there. Okay. And I recognize a couple of original pipe investors here, Seth and others. So if you are part of the original pipe, could you please stand? I see Adam here. Please stand up. These guys helped us fund the initial transformation of BitMine. I believe I see Ash from the Ethereum Foundation here. So Ash, could you please stand up? Ash is from the Ethereum Foundation. Okay, and then of course I'm not going to ask all the stockholders to stand up, but I do want to recognize you guys because one, I appreciate you making the journey out here. It's the first ever shareholders meeting we have. We tried to make this a fun event for you, and we have some content for you to learn. But it really means a lot to us because we're here to serve the shareholders and really do right by the stock. Okay, so let me just click forward on this presentation. Okay, so I put together a presentation for our annual stockholder meeting. And here's some disclaimers. again, just like the proxy statement, I hope you read it line to line. But here's the agenda. I want to give you a recap of 2025, which was the year that we transformed BitMine. I want to give you an update on progress about the alchemy of 5% and what it could mean. I do want to spend a lot of time talking about the 4 pillars of growth to drive stockholder value. And this is going to apply to 2026 and beyond. Then I want to go back to why Ethereum is the future of finance. And of course, that we've got the team in place to drive transformation. Okay, I think it's a year, we need to recap 2025 because the year was where a lot of digital asset treasuries came onto the scene, by our count over 80. But in that 12-month period, by the end of last year, we have now seen the emergence of what I would call dominant DATs. Okay, first, just a reminder, I want you to think about holding periods. At Fundstrat, we first wrote about Bitcoin in 2017, and let's look at how Bitcoin has, and at that time we said you'd want to own 1% of Bitcoin. And let's see how it did compared to other assets. And a lot of these other assets I would still own, but as you can see, Bitcoin in that time period that's passed has gone from $960 through September 26th, which we just want to record before the liquidation event, 109,000. That's a 112 times return. It outperformed NVIDIA, which went from $2 to $178, which is massive already, 65x. It beat NASDAQ, it beat gold, which went from 1,100 to 3,800, and it beat the S&P, which went from 2,200 to 6,600. So if you put 1% into Bitcoin, that was a good insurance bet because it really crushed everything else. But Ethereum did even better. You can see Ethereum went from $8 to $3,900. That's almost a 490 times return. Okay. But last year, crypto kind of disappointed. You can see gold did great, the Mag 7 did well, NASDAQ did well, S&P did well, and you can see Bitcoin and Ethereum actually were down for the year. So in some ways, it made many people wonder, is a crypto winter started, or was even last year a crypto winter? Keep in mind that crypto was doing great until October 10th of last year. So Ethereum was up 40% and Bitcoin was up 33%. But then we had the crypto mass liquidation event. $1 trillion of value was wiped out. As many of you know, it was the largest deleveraging event in the history of crypto, even bigger than what happened with FTX. And they estimate over 2 million crypto accounts were wiped out, went to zero. And many market makers and even crypto exchanges had their balance sheets hurt. So the industry, since October 10th, has been limping along. In 2022, November 2022, when FTX collapsed, it took 8 weeks before the market began to show signs of life. So if you asked us this year, it's a larger event, but when would crypto begin to maybe find its bottom? It would be December 10th. And, you know, post-October 10th, as you can see, Ethereum fell basically by half, and Bitcoin fell by 36%. So here we are, but if you kind of squint, you can see since the late December, Bitcoin and Ethereum have begun to claw their way back. Okay. Now, think about that. It was the largest liquidation event in the history of the crypto industry. So, crypto treasuries were built to go public and outperform ETFs by buying crypto. And since October 31, only 2 crypto companies bought any crypto in size. MicroStrategy, from December 31 to the end of the year, bought $2.9 billion worth of Bitcoin, which is a lot. Metaplanet bought $330 million of Bitcoin. And among the Ethereum treasuries, only one crypto treasury bought any Ethereum, which was BitMine, which bought $2.4 billion worth of Ethereum. And in fact, 2 Ethereum treasuries actually sold Ethereum. Okay, so if you think about accretion by buying ETH accretively or buying Bitcoin accretively, it's only 2 companies. Now, let's think about other dimensions about Ethereum treasury dominance. One is just the size of the balance sheet, dollar value of Ethereum held. These numbers, of course, are a little stale, but BitMine is around 13 billion, and that is basically 5 times larger than the next largest Ethereum treasury. But the lifeblood of a crypto treasury is trading volume. BitMine trades $1.6 billion a day, and as you know, we publish weekly stats, but routinely, BitMine is a top 50 most traded stock in America, top 50. And as you can see, that's 14 times larger than number 2 in crypto treasury. So if you're looking at what institutions want a really liquid stock that they can buy without disturbing the price. Well, we trade $1.6 billion a day, so they can buy $1 billion in a day. But the next smallest crypto ETH treasury only trades $100 million a day. It would be very hard for them to put $1 billion to work. So again, that's the comparative dominance. And so my takeaway is in 2025, because of October 10th, it has shown who are the dominant crypto treasuries. And it really, in my mind, is 2, MicroStrategy and BitMine. And between the 2 of us, it's 90% of all crypto trading volume for DATs. So the other 78 companies represent 10% of the volume. Okay, so let's jump to part 2, which is the companies made rapid progress on getting to 5% of Ethereum. So that was our mission statement on June 30th when we launched the Ethereum Treasury funded by our PIPE investors, 2 of which are here today. And in those ensuing 6-7 months, as you can see, we wanted to get to 6 million ETH tokens. And in 6 months, we're at 4.2 million ETH. So we're 68% of the way to 5%. We originally thought this would take 5 years, but we're 68% of the way there in 7 months. Now, thank you. Now, we have cash, $1 billion of cash on the balance sheet. So if we add the cash and said, let's buy Ethereum with the cash, we would have 4.5 million ETH tokens, which means we're 75% of the way to the alchemy of 5%. So we believe, if you believe this trajectory, BitMine should cross 5% sometime this year, assuming the 7 months continue to hold. And as you can see, we studied the blue chip standard for crypto treasuries, which is MicroStrategy. And as you can see here, we have 13 billion of ETH, including cash, in roughly 7 months. At the same point, MicroStrategy had 3.4 billion of Bitcoin. In fact, we accumulated as much Ethereum as Strategy accumulated, which took them roughly 1,300 days or 4 years. Okay, so now that we've stacked some ETH, I think you need to think, because many of you might get angry at us, because I've seen it on Twitter, like, Tom, if you got ETH and don't do anything else, you're just gonna stake it, okay? But then I think you're misunderstanding what happens if you have a substantial stake and especially as a validator, in a proof of stake network, in one of the most important blockchains in the world today. I mean, Ethereum, in our view, is going to be the future of finance. So we have 5%. Imagine like someone saying, hey, there's this really tall kid, okay? He's like 7 feet tall, So we're just going to have him clean gutters because he's so tall, you know? Like your best use, best return should be like, oh, he should be a basketball player or something, right? Not a roof cleaner. Okay, so that's what I'm saying. You have to imagine if you own 5% of Ethereum, and it's the most important blockchain in the world, and it's going to be the future of finance, and it'll be the settlement layer for almost everything else, I don't know if you'd want us to just be staking ETH and then that's it. And like, but that's what a lot of people on, many of you might even think that's what you want. But let me just try to open your imagination to some things that would make sense. First, when we made our first presentation about BitMine, we gave you this roadmap. We said we're going to have a Made in America validator network. We're going to be a community participant, especially with the Ethereum Foundation, and Ash, who was one of the key folks there. We also wanted to do moonshots. Okay, these are select investment and ideas that would really enhance the future value of Ethereum. And of course, we wanted to get to 5% of ETH. So I want to focus on this moonshots. And at the time we wrote this in our first presentation from July, we said we would use up to 5% of the balance sheet to do moonshots. Now, 5% today is $700 million. So you should realize we've been giving you this idea that we would take 5% of the balance sheet, $700 million, and our balance sheet will grow. But we want to do moonshots that will strengthen Ethereum's competitive position. So today we announced one of the moonshots, okay? You might be confused, so I'll explain to you why this is not confusing, okay? We made a $200 million investment into Beast Industries. I would say if someone said, what are you expecting to accomplish? If this was just like, hey, I'm going to make a $200 million bet into Beast, no brainer, okay? Because he is, well, I'm going to skip around. I'm going to jump. Because he is the iconic content creator of our generation. There is nobody more important to Gen Z, Gen Alpha, and Millennials. Now, I'm looking at the room, okay? I'm going to guess, okay, that the representative population of Gen Z, Gen Alpha is not here, okay? Because otherwise you guys would be using a lot of slang I don't understand. I see some millennials, but I see a lot of Gen X and a lot of baby boomers, okay? So the thing is that you might think that we have gone off the rails, but that's not the thing, okay? MrBeast is the #1 content creator in the world. And if you're not following how important he is, first of all, he has 1 billion followers, okay? 1 billion, like there's 7 billion people on this planet. He has 1 in 7 people following him. But I'm going to say I only think there's 3 million people with like internet accounts. He has like 1/3 of all people that are on the internet following him. That's reach. For instance, he has the only person with more followers that are celebrities is Ronaldo, Cristiano Ronaldo, okay? And of all the creators, he's 1 billion. The next is, I can't really read the name. I need my magnifiers, okay. 300 million. He is a giant among content creators. In fact is, nobody's gonna be able to become MrBeast again. I would say it's almost impossible for someone to, in the next 10 years, to get 1 billion followers, and he's created this organically. In fact, if you look at YouTube usage, MrBeast has more viewership than Walt Disney or Netflix or NBC or Paramount, Fox, Warner Brothers, or Amazon. Nobody's more watched in streaming world than MrBeast, okay? And think about that for a minute. And the Super Bowl, which is like considered, you know, the global event, gets 256 million views on that event. Twice a month, MrBeast puts out a video, and each one gets 252 million views. His content is more watched than the Super Bowl. Okay? So he has 535 million views a month out of his 1 billion followers. They are super engaged. And now he does all these collaborations. That's the key word. Okay? He collaborates with all these people that you might care about somewhere on this grid. Okay? But he does content with them. And guess what? Well, actually, let me just jump forward. Well, yeah, let me back up then. Okay, so that's where it comes with us. So again, I'm going to start with what I just said. So if it was just a $200 million investment, guys, this is a no-brainer. This guy is the most important content creator in the world. And BitMine was invited to invest in their capital structure. Look at who else is allowed to invest. Social Capital, which is Chamath, Alpha Wave. MrBeast himself, he owns 51% of the company. We're the largest corporate and strategic investor in his company. So we are big, okay? What do I think that investment's worth? Okay, I can make a forward statement because I'm not Beast Industries, but I think we're going to easily make a moonshot return on that, 10x. But that's not the reason, okay? So he's the #1 content creator. And now we have substantial call option value on any future consumer service developed by each, okay? Now I want to read what Jeff Hausenbold, their CEO, actually stated. Sorry, I'm going to have to pull this up on my phone. About this investment that we made. And I want you to listen carefully to his words. Okay, what he said was, "We are excited to welcome Tom Lee and BitMine as new investors in Beast Industries, joining our current top-tier venture investors." And we're not a venture investor, we're a strategic corporate. "Their support is a strong validation of our vision, strategy, and growth trajectory, and it provides additional capital to achieve our goal to become the most impactful entertainment brand in the world." Okay, so we're helping them get to their goal. "We look forward to exploring ways to further collaborate," see, that's the word, "and incorporate DeFi into our upcoming financial services platform." So think about this. If you want Ethereum to be part of the future of finance, it kind of makes sense to have a connection to the most important content creator in the world. Okay? So again, if you were angry and you downvoted our investment in MrBeast, you're allowed to change your downvote. Okay, so I just want to explain the potential synergy. So you have, okay, someone says the #1 investor for retail investors, okay, me. The #1 holder of Ethereum in the world. Okay, we own more Ethereum than anybody, and it's the future of finance. Plus the #1 content creator in the world. I mean, guys, that's the option value. I mean, that's the moonshot potential, and that's what we just put BitMine on a trajectory for another moonshot beyond just the money we earn from staking. Okay. Now, lastly, if you want to know where we could have potential collaborations, I'll give you some thoughts. For instance, do any of you guys watch Beast Games? Okay, like it's huge. It's the #1 show in 80 countries. #1 show in 80 countries. 144 million people watched it in the first 25 days. It's the #1 unscripted show in Prime Video history. 50 million families watched it in the first 25 days. I mean, this is driving Amazon growth, and it broke 67 world records. Well, would it make sense for BitMine to be a sponsor partner with MrBeast in one of the episodes? Right? That makes perfect sense. Well, that's what we're going to have synergy from by being their largest corporate strategic investor. And by the way, something that the Mosaics partners and I, Matt from there here, and Shen's missing, but one of the things that was super compelling to us is that the corporate values of Beast Industries. If you're not aware, they are a very philanthropic group. MrBeast himself is extremely charitable. Beast Philanthropy has grown into one of the biggest giving engines in the world. Okay, they've raised hundreds of millions of dollars for things like refugees, food, prosthetics, surgeries. It's incredible. So we have corporate values aligned, again, with what I think is the most important content creator in the world. Okay, so hopefully, and I took a lot of time to explain that, you understand this was a smart move. Okay, we're not doing something crazy with shareholder capital. And they're growing, by the way. Look at his follower count is up 30% year over year. I mean, pretty soon, his follower count's going to include like Mars inhabitants because he's going to cover the whole planet, right? After 7 billion, or it'll be like, you know, frozen eggs and stuff. And 41% growth of views. Okay, so that takes us back to our strategy going forward. We have 4 pillars of growth because, again, I don't think as shareholders you want us to just simply be staking ETH and buying ETH, especially as we get close to 5%. So let me explain to you our 4 pillars of growth. The first is to maximize yield on Ethereum. Okay, so we're going to optimize the staking yield. The Caesar benchmark is 2.8. We're going to try to do better. One way we do it, at least one way that we've talked about it, is to pursue alpha strategies. Now, the entity that will execute this for us is Mosaics Capital. But we also have an advisor, Tom DeMark of DeMark Analytics. For those who are boomers or older Gen X, Tom DeMark is iconic. He is one of the most famous market timing people. He has won so many awards. He only has 2 clients. I believe he's disclosed his, well, I don't think he's disclosed his first client, so I'm not going to name it. We are his only other client. And I showed you that slide where we bought 2.4 billion of ETH in the last 2 months. Tom DeMark's strategies, along with Mosaic's execution, probably saved us $400 million on those purchases. So think about that. We bought ETH in a way that made you guys money. So don't shake your fist at ETH when it's down. We like it when it's declining, okay? All right. But here's where I can give you some imagination. We have 13 billion of ETH. So imagine proposal 2 didn't pass and we're stuck in the water. We don't buy another dollar of ETH for the rest of the history of the company. But using the staking yield and with some optimization, that would generate 367 to 390 million a year in rewards. We have $1 billion in cash. That would generate another 35 to 40 million. The company will generate $400 to $433 million a year in pre-tax income. That's more than $1 million a day. And that's been achieved in 6 months. I think a company that goes from 0 to, in 7 months, a company that can make $400 million a year, that's quite an achievement. But of course, thank you for the stockholders for getting us here. But let's think about a future scenario. Let's say that ETH's price stays at 3,000, but we get to 5% of ETH. That number rises to 542 million to 583 million. But I think ETH is grossly undervalued, okay? Let's say a proper price for ETH is 12,000, okay? And I'll explain in a later section how I get to 12. Then the annual rewards and interest jump to 2 billion to 2.2 billion, okay? That would make us one of the 20 most profitable companies in America. So, or maybe 30th most, but it's really up there, okay? So that's why, if our vision is correct on Ethereum, and we're generating this level of rewards and income, you don't want us to just be a staking entity. Okay, so that gets us to the second, which is we want to invest in moonshots. So far, we've done 2. We will do more, Orbs and WorldCoin. We want to accelerate tokenization products. We want to work with the L2s and the DeFis, the leading projects, including something like Lighter. And I'm going to have a fireside chat with Vlad today about Lighter and why you really should pay attention to Lighter and its token. And we're really excited about this Beast Industries moonshot. Okay, but just to remind you, BitMine invested in ACO $20 million. Okay, WorldCoin, it was founded in 2019 by Sam Altman, who's the OpenAI CEO, and Alex Blania. They have built an incredible technology for proof of human. It is the only way to verify your humanity today using an iris scan. They're not scanning your iris. They're using your iris to create a cryptographic hash, but that is unique. Out of 7 billion people, that would be the only number cryptographically unique identification. It's the only thing more secure is a fingerprint. And ACO's done well. They hold 10% of the circulating supply of WorldCoin, 11,000 ETH, 69 million cash, and they verified 17 million humans. The WorldCoin app, if you haven't downloaded it, it's almost an Omni app. It's that good. And they've done some cool pilot partnerships to do proof of human verification, sort of a single sign-on with Kraken and Coinbase. And they've also made strategic investments into something like Mythical. Okay, and of course, tokenization is the future. And that's why we want to do moonshots into tokenization. I might fork this conversation for a bit to explain to you tokenization, because I think people are underestimating how important it is. Tokenization does give you fractional ownership. It reduces cost and efficiency, 24/7 trading, enhanced transparency and security, increased liquidity. Okay, but I think it's really taking Wall Street into the future. Okay, so it's a huge evolution. And in fact, Larry Fink said it's the biggest innovation since double ledger accounting. He's the CEO of BlackRock. So I'll just give you some examples of tokenization. And I'm sorry, this is taking longer than expected, but I had to explain to you MrBeast. So first, to tokenize something, you could just do fractional ownership. So you could say, take the painting and fractionalize it, and this is what you own. But what we believe is more important is to factorize an asset. So let's say you took the painting, you broke it down into the colors, okay? And it'd be the equivalent of like take a company and break it down to its components. Then you can decide that you just want to own a factor. So I'll give you an example for Tesla. You can time tokenize the company. You can base it on, remember, Tesla stock price is the sum of all future earnings. You could pick a single earnings year to own. It's a product tokenization. You could break it into its products, the present value of its products. You can do geographic tokenization. And you can tokenize the financial statement. Okay, let's give an example of time. Here's all the future earnings of Tesla. And we know Elon Musk gets paid on his 2036 earnings, okay? So you might just want to buy the earnings for that year because he's going to obviously have some enormous upside number to get paid. And that would be a lottery ticket, because imagine, you don't own any of the earnings for Tesla for the next 9 years, and you just own it for the 10th year. That's a huge way to make a bet. If you believe in Elon Musk, that would probably be the bet I would make. And you wouldn't pay a lot for it because it's 10 years from now. You can product tokenize. He's got EVs, robotaxi. I left off Optimus Prime. Full self-driving, solar. And remember this, if you look at Tesla's stock price, it's the sum of all the future product streams that are here. I forgot Optimus Prime. And then there's going to be this plug, which is the growth of Tesla in the future, which is Elon's brain. You can just make a bet on Elon's brain in the future. Okay, that's the kind of tokenization that can happen with smart contracts. And that's what I think a company like Lighter, that project, could be the ones working with us to develop these tokenized products. That would be a future moonshot, right? We also, the third pillar growth is we want to productize BitMine. There's an app coming. We have a huge community of dedicated shareholders, and the BitMine brand is strong. It's interesting, when we did the initial transformation for BitMine, we're like, wait, we're an Ethereum treasury company. Why? And that was, BitMine was a BitMine mining company. Shouldn't we change the name? Well, 7 months later, I think we like the BitMine name. We're going to keep it. And of course, I've got a BitMine lapel pin here. So an app is coming, and it's being developed by an outside technical team. Now, you might wonder, what are we going to offer on it? That's what you have to wait to find out. Okay. Okay, so next, the final pillar of growth is that we're going to bridge TradFi and DeFi. And TradFi means traditional finance and consumer services. Again, because we believe Ethereum is going to be the future settlement layer and the future of finance, and we're the largest holder of Ethereum, we should act as that bridge. We're the top 50 most traded stock. Maven, when it launches, is going to be the largest staking entity in the world. So once we launch Maven, we're the biggest staking operator in the world. I mean, think about that. Like, we're not going to be small fry trying to get market share. We'll be the biggest. And that means we can actually act as a settlement layer for a lot of other, for Ethereum and maybe other tokens as well. So Maven, as you know, it's going to be best-in-class staking. Again, we really don't want to divulge too many details before we reveal it, but this is what we've told you so far. Okay, so you can see where things sit. We're the largest holder of Ethereum in the world. We're going to bridge things in finance and in DeFi. So you realize the roadmap's quite optimistic ahead for us. I'm going to have to fly through this because I think I am running over time. So Ethereum's the future of finance, okay? Let me take us to this slide. I am? Okay. If you're going to think about Ethereum's price, you should think of it as its relative importance versus Bitcoin. Because the ETH-BTC ratio is essentially saying, is Ethereum doing better than digital gold? And as the ratio goes up, that means smart contracts are more valuable than digital gold. And so that's how you should think about that price ratio. And currently, Ethereum to BTC is 0.03463. Okay. In 2021, that ratio was 0.08727. In my opinion, and many opinions of the team here at BitMine, Ethereum is more useful now than it was in 2021. I mean, the fees have come down. The amount of developers has expanded vastly. A use case has massively emerged, which is stable coins. And now there's tokenization. And of course, there's going to be a bridge into the consumer through things like Beast Industries, right? So, in fact, Standard Charter, which is, we think, we've seen a lot of Wall Street research. I think Jeffrey Kendrick does some of the best work. He says 2026 is the year of Ethereum. He sees the ETH-BTC ratio returning to its 2021 highs, okay? So he's using that metric. Okay, well, let's think about that ratio. There's 3 sets of columns here, okay? See the middle set of green? Okay. Yeah, I mean, it's a little hard to see on the screen. So that's the 2021 high ratio, 0.0873. And then we put a little horizontal line because we expect Bitcoin to get to 250,000 this year. So if Bitcoin gets to 250,000 and Ethereum trades at its high relative to Bitcoin, Ethereum's at 22,000. And it's currently 3,200. So you see the massive upside in Ethereum. Well, is that good or bad for BitMine stock? See, I went to Bloomberg, did what they call historical correlation. The x-axis is Ethereum's price since July. The y-axis is BitMine's stock price. And you can see if Ethereum's price goes up, BitMine's stock price goes up. So the correlation is like 90-something%, which makes like intuitive sense. Okay, well, let's shrink that a little bit and say, what if Ethereum gets to 22,000? What does this trend line project to? $500 price for BitMine. If Ethereum gets to 60,000, the stock price is 1,500. And of course, if Joe Lubin is correct, which, as you know, he's been dedicated to Ethereum, and I think he has a good argument for it. He thinks Ethereum gets to 250,000. BitMine stock price is 5,000. First of all, that's why we need these share authorization, because I mean, how many people can buy a 5,000 share? Like, you know, people are going to buy like 1 share or 0.1 shares, right? So that's the upside. And then finally, we have a strong team, which I already introduced, but you know, here are some of the members of the executive team. So I think that the presentation might have created some questions for you guys here. So I think we're going to have a few questions. So if you have a question, raise your hand. However, please do not ask about the shareholder vote. That's already concluded. Okay. I see a hand there.
Thank you for the question.
Oh, I think there's a microphone.
Oh, thank you so much for the question, Mr. Chairman. Crypto holders will know the slogan, not your keys, not your crypto. How does BitMine custody their private keys and prevent them being stolen or absconded, you know, et cetera?
Yeah. It's a great question, and it's a question for all the crypto treasuries. As you know, crypto is a bearer instrument. What does that mean? Like, if you buy crypto directly, you now have a private key that you're responsible for. And you can access it if you memorize the cryptographic hash, or you have a password, or some seed phrases or whatever. Now, you met the executive team here. None of us has a memory to memorize all the cryptographic keys, especially buying $14 billion worth of ETH. So we do not custody the Ethereum ourselves. We use recognized and regulated custodians. Now, we do not name our vendors for security reasons. But again, if you want to try to shake us down tonight, none of us has the private keys. You know, it's the same structure as MicroStrategy. Michael Saylor does not keep a ledger wallet in his pocket for his 59 billion of ETH. He uses the same custodians. But for obvious reasons, I don't want to tell you more than that. Okay, I see a couple questions here.
Thanks, Mr. Lee. I was wondering, what does Vitalik Buterin think about BitMine immersion? What's his take on it?
Well, I've met Vitalik. You know, Vitalik's very diplomatic because he doesn't want to bless winners and losers. And, you know, but he also recognizes the importance of community and users. And he has a vision around Ethereum. He doesn't necessarily believe Ethereum is created to become the next monetary system. However, it is literally the blockchain that's best for the future monetary system. There's a reason why JP Morgan is building their money market tokenized fund on Ethereum, and why Robinhood is tokenizing stocks on Ethereum, and BlackRock is doing tokenized funds on Ethereum. So these do not make Vitalik's unhappy. Now, Ash, who's been one of our folks that have really connected us to the Ethereum Foundation, he might be willing to share us what he would be saying secondhand, what Vitalik might think about Ethereum. I don't know if you're willing to, and BitMine, I don't know if Ash, if you want to make any comments.
Okay, thanks, thanks, Tom. I think what's key with BitMine and other DATs is that they are bridging the gap between Wall Street and what has been built over the last 10 years. Now, I think Tom's been a key proponent here. If Ethereum was to have an investor relations man, he is the chief of investor relations of Ethereum.
IR@ethereum.org.
No, so it's great, and I think Ethereum will store most of the world's value at some point in time. And if you think about a technology that is storing most of the world's value, tokenization, as Tom was talking about, that is where the collateral will exist, and that is where the capital efficiency of the world, the world's financial system will exist. So I think Tom's a big proponent and driving BitMine and global adoption of Ethereum. So from that perspective, I think he's a key stakeholder, as is BitMine.
Yeah. And just to emphasize, I don't think Vitalik wants to pick winners and losers. So I don't think he views us as any more important than any other Ethereum DAT. And I think that's important because, as you know, we don't want, like if you look at traditional equity markets, you don't want policymakers to pick winners and losers. You want the market to make that decision. So I really respect Vitalik's view. Okay. There's a few more questions, so can we hit this gentleman?
Hi, my question's about the current legislations it's processing through our government, and specifically if you would address this issue of the banks not wanting stable coins to, owners of stable coins to receive a yield.
Yes. This gentleman's referring to the Clarity Act, which is making its way through Congress. I think some of the crypto industry and some of the lobbying groups that we work with are not happy with some of the current proposals. I don't really want to say too many things because, remember, the audience who's watching the stream are people in the crypto industry, but also people in the traditional banking industry. And I don't want to have I don't want to have a bullseye on my back. But what I would say is, you realize the crypto industry and the traditional Wall Street banks have very different objectives when it comes to crypto regulation, because the traditional banks want to stack it in their favor. They want to make it harder to be a new entrant, and they want to make it easy for the banks to dominate by being like a big bully and saying, hey, listen, all you little pygmies, I just entered the room and it's my game. Whereas the new entrants want a level playing field. They want the best projects to win. And it's already kind of been happening in crypto. Like Tether, if you guys know, Tether is the issuer of the USDT. They have 180 billion of USDT outstanding. Let's say it's 190 billion. There's $19 trillion of dollar supply out there. So Tether has 1% of the money supply. Is that right? Yeah, 1%. But Tether is going to earn close to $20 billion by making a stablecoin for 1% of all US dollar supply. That makes it the sixth most profitable bank in the world, and its market value would be number 2 only to JP Morgan. So this crypto native stablecoin issuer is suddenly like the second biggest bank in the world. They only have like 300 employees. JP Morgan has 300,000. A crypto native company using blockchain as settlement, and by the way, most of Tether runs on Ethereum, is like a better bank than a bank. So you can see why Clarity Act it's kind of, there's a big fight, right? There's what the crypto guys want versus what the banks want. But I don't have a view beyond that, because again, you know, this is all being streamed. I don't want to, you know, I don't want to drink coffee and like get sick or something. So, okay. There's a question here.
Great job, Mr. Lee.
Thank you.
I want to say you're #1 right here, right now.
Thank you.
Yeah. Anyway, I wanted to know what your thoughts were about BMNR. When will it top out this year? What month do you think it will reach its top?
Yeah.
What month this year?
I can show you my diary, and like every day I have a target price. Here's the thing, like, you know, I really can't give you forward guidance because then we have to 8K it. And then, of course, I already know from my days at Fundstrat, like if I say this is going to happen on this day, then everyone like marks it in their calendar. And then all of a sudden they're like, hate me because they bought call options on that expiry date. But you saw the chart, like Ethereum's undervalued. Ethereum's ratio to Bitcoin should be going up a lot. I mean, it should go beyond the 2021 high. And Bitcoin is undervalued because Bitcoin had a rug pull on October 10th, and it's beginning to recover. Gold has been on a dramatic rise. Every dramatic rise in gold has been followed by a Bitcoin rally. And year to date, Bitcoin's beating gold for the first time probably in many years. So I think Bitcoin should do well, which would mean if the ratio of Ethereum to Bitcoin goes up, because Ethereum's already up 12% year to date, you know, Ethereum should outperform dramatically. And then that's great for the stock price. So, I mean, if you're worried about BitMine where it is now, just keep in mind, ask yourself these questions. Is BitMine going to have a liquidity problem? It has $1 billion of cash. Does BitMine have any debt coming due? 0 debt. Does BitMine have to sell its Ethereum to fund operations? It's $400 million of pre-tax income a year. I mean, no problem there. Is there a problem with Ethereum? Ethereum's usage is going through the roof. They've, you know, Fusaka upgrade happened late last year. Use cases are growing. So, I mean, if BitMine's, you know, stock price is in the dumps, which it kind of is it because of anything fundamental? Not really. But when did BitMine's price kind of take a hit? After October 10th. I think all crypto kind of got hit after that liquidation event. But relative to other cryptos, especially DATs, only 2 since that period of time have actually sort of picked themselves off the ground and continue to buy crypto, which is BitMine and MicroStrategy. So I hope that makes you feel better. But again, I can send you my diary later after the show. Yeah. Oh, okay. Sorry, guys. One more question.
Oh, I get the last one. Sorry, guys. Tom, thanks for everything you're doing for all of us. We really appreciate you and the team. You know, being that BitMine's role within the Ethereum ecosystem, the importance of it, and how close we are to the 5% alchemy, has the consideration been given to go to 10%?
Yeah, so the question is, you know, what if when we hit 5% of Ethereum, you know, do we stop there? What if we go to 10%? We've asked that question a lot because one of the reasons we pick 5% is because of the power law. The idea is that if you own enough of a network, you begin to have beneficial and unique influence, not on the network itself, but on people who want to interact with the network. So in other words, if we were only 1% of ETH, would we be invited to invest in Beast Industries? Probably not, right? They wouldn't care. You know, would we be the liquidity backstop for a lot of potential exchanges? Probably not, but we have like 14 billion of ETH. and it's no debt. I mean, we can be liquidity for a lot of folks. And of course, that's why we could be the settlement layer. Does getting to 10% bequeath us more benefit? It might, but we also don't want to crowd out the network. Because if you own too much of Ethereum, then you become a malevolent entity. Because all of a sudden, you ever heard the phrase like, if you borrow money from the bank, they own you. But if you borrow so much money from the bank, you own the bank. Well, in a similar concept, we don't want to end up making this to have so much Ethereum that we crowd out the voices. I mean, Ethereum works because it's a huge community. So we want to balance that. So I don't know what the right number is, but, one path is like we get to 5% and we're just dividending a lot of return because of our alpha strategies and our moonshots. Or we see if, what level beyond that would be okay to pursue without, exerting too much influence. We want to keep Ethereum, a decentralized network. So, well, I'd have to ask the master of ceremonies.
Mic 4.
Multiple. Thank you. Sorry. There was some controversy about Fundstrat giving 2 different stock prices of Ethereum. Can you comment on that by chance?
Yes.
Thank you.
When I first entered Wall Street, someone gave me some advice. They said, Tom, if you want to be correct, make 300 forecasts. And one of them will be correct, and you're never wrong. So I decided to say at Fundstrat, let's make 20 forecasts, because one of them will be correct. I'm just kidding. That's what you're referring to is that in my other job, I'm the founder of Fundstrat, a research firm. I'm also the chief investment officer of Fundstrat Capital, which, by the way, has reached 4.7 billion of assets under management. Thank you. And Granny pin here. But at Fundstrat, we have 3 leading voices on markets. I do macro. I'm head of research. Mark Newton, who's our head of technical strategy, and Sean Farrell, who does crypto strategy. Each of us looks and approaches crypto differently. I have a top-down view of Ethereum and Bitcoin. I'm not trading that position. I'm trying to keep you from being your own worst enemy. Most people make a mistake because they sell at the bottom. Ethereum's like at the bottom. I'm trying to convince you, like in 2017, just stack your Bitcoin. Mark Newton is very tactical, and I consult him all the time. His time frame can be 5 days. It could be, 2 weeks, 2 months. It can be 12 months. If it's 5 minutes, he's going to call me in the bathroom. I'm just kidding. He doesn't call me when I'm in the bathroom. And Sean Farrell, he manages a portfolio of crypto as if he's the portfolio manager. He doesn't necessarily have a view. He might have a directional view. So the controversy that you're referring to is Sean Farrell said Ethereum would go to 1,800. It could go to 1,800 in December, okay? In December, Sean Farrell said that Ethereum could go to 1,800 in January. Whereas Tom Lee said Ethereum should rally in the first part of the year. And so therefore I pulled Sean into my office and I said, Sean, listen, I'll give you $20 to change your mind. Just kidding. But Sean, of course, is managing a crypto alpha portfolio. So that's just, he's not pinning 1,800 and betting on it. He's just saying, I'm going to be cautious around ETH. Maybe I'm a buyer there. But if you're a subscriber to Fundstrat, Sean has modified his view. There's been a recovery in price. So now he's buying Ethereum. So I don't think he would stick to that 1800 view. So the Twitter world will say, hey, Fundstrat's like throwing out 2 targets. It's not. It's just different voices. And if you're a subscriber to Fundstrat, you'd see it's not controversial. But by the way, if if you'd like to get Fundstrat research, you're welcome to sign up. Just kidding. Okay, well, thanks. I think that concludes my part. Yes. Okay, yeah. Okay, so we're going to bring Vlad from Lighter up next, and we're going to have a fireside chat. Okay. Well, welcome everyone. We have a fireside chat with Vlad. Vlad and I had a conversation ahead of this, and Vlad is a crypto native. So that means he is like high IQ, could be autistic, but super high IQ. But also that the audience here is not likely to be crypto native. So he and I had a conversation because we wanted to make sure that we keep this conversation in a way that kind of makes intuitive sense to whoever's here. And we apologize if someone who's watching live stream is a crypto native and thinks I'm asking repetitive questions. But I do want to sort of have a conversation where we can explain what Vlad and Lighter do, but then also why, for us, for BitMine, we want to be doing more things with Lighter. So, okay, so Vlad, could you just start with talking about yourself and your background?
Great. Thanks for having me, Tom, and great to meet everybody here. So I actually, funny enough, started out in TradFi about 20 years ago at a place called Citadel when they were just getting into high-frequency trading. So I did that for quite some time, kind of was through the crash of 2008, the flash crash of 2010, kind of saw what works well in TradFi and what some of the shortfalls might be, and came out to Silicon Valley in 2012 and spent time there mostly working on AI and fintech, but started following blockchain and crypto kind of from the sidelines, investing in some projects, advising some teams, so on and so forth, and really, things became really clear about what value blockchain and particularly Ethereum can add to the financial system, and that's kind of what led us to Lighter.
Great, and I'm going to guess a lot of folks have not heard of Lighter. Would love for you to give us a top-down sort of explanation, and I can sort of expand on that a bit.
Yeah, absolutely. So Lighter is a decentralized exchange built on top of Ethereum, and we can talk more about what that means, but you can trade spot assets like Ethereum, like our native token LID, other spot assets on Lighter, but the biggest market you can trade on Lighter right now are perpetual futures. So these are derivatives that, unlike traditional futures that have an expiration, kind of you can trade them without an expiration. You don't have to roll them over. You can trade them with leverage. And Lighter, because it's on top of Ethereum, it's very secure. It's kind of on the most secure settlement layer. Everything that happens on Lighter is verifiable. What that means is every single trade, every single order, every single liquidation, there's a proof that that happened correctly and fairly. So, for example, something like the flash crash, wouldn't happen, and if there are big moves like on October 10th, there's a record of exactly what happened, who got liquidated when and why, and all that. But in terms of numbers, we have around 4 or 5 billion of daily volume at this point. You know, we are live in many countries. You know, hoping to be live in the U.S. soon, but you know, have tens of thousands of daily traders and process hundreds of millions of orders a day.
Yeah, and so so Lighter is a decentralized exchange. In somewhat, you may have heard of something like Hyperliquid, and that's similar. But some of these folks might wonder, how does your project differ from what they call centralized exchanges like Coinbase or Binance or others?
Yeah, so you know, Coinbase, and they're actually an investor in us as well, and so they're partners with us, and you know, they're in a variety of businesses, but the main business that they're mostly known for is the centralized exchange. They also do stuff in DeFi, and where we can partner with them on so on. But the main thing that Coinbase does in their core business is where they custody your assets. You can trade at this point, for U.S. customers, you can trade spot assets. They also have a perpetuals offering for customers in other jurisdictions. But there, everything that happens kind of happens internally, both the custody and kind of the rules around matching and rules around risk and liquidations. All of that kind of happens centrally as opposed to in a decentralized way, right? So that's kind of the the main difference. Now there's different, like if you look at the whole ecosystem, right? Like you can there's the custody part, then there's the part about, well, what about how do you make sure the matching is fair, right? Like how do you make sure liquidations are fair? So there's kind of different aspects of what you want from a decentralized exchange. But at a very high level, like something that's completely centralized, there's some benefits to that as well, but we believe that kind of over time the future is decentralized.
Great. Okay, so when we sort of finished with our conversation, if there are more questions, we may have some audience questions and to see if they need more explanation. But I wanted to sort of ask you very specifically about why did you decide to build on top of Ethereum?
Yes, so we started building in late 2022 when it was pretty clear after what happened with FTX and other things that we're seeing that a really strong decentralized exchange was something that was needed in the market, and we thought a lot about the architecture of that. It was pretty clear from the start that Ethereum is kind of the security layer, the layer that you can build upon. That's the kind of the most trusted, the most reliable. It's been around, the longest of any of the L1s, and they already had a really strong DeFi ecosystem, which I think in part, you made a point earlier that the Ethereum, Vitalik and others aren't necessarily pushing DeFi, but I think that's actually a good thing, right? Like it organically, because of how secure it is, hundreds of billions of dollars. I mean, I think when we started building, it was more like tens of billions of dollars, right? But like all of that, all of those assets are, secured by Ethereum. And so for us, it was very clear, if we want to build something that has to do with finance, and that's very hard technically to make it work, to have a very efficient exchange. So that's why it was actually a hard technical lift for us to do. But there was always no question for us that that's, the ground, security layer you want to build on top of.
Yeah. So the way you built on Ethereum is that you are the largest L2 today, if I'm correct.
Well, by certain metrics, so we're, in terms of TVL,
or one of the largest.
In terms of TVL, we're the fourth largest. And just to step back, later I mentioned in the context of the product and what it means for the customer, but the tech behind Lighter involved building our own layer 2 on top of Ethereum, which, as Tom said, is one of the largest, fourth largest by TVL in terms of transactions per second. It's the highest, and in terms of orders that are processed and volumes, I think it's one or first or second highest. But yeah, I mean, I think kind of the whole L2 architecture is really interesting because like the more secure the layer 1, in this case Ethereum, the more performant layer 2s on top of it can be.
Yeah, and before I explain it, I kind of want you to add to the brag. Aren't you the most used L2 today?
Yeah, I think if you look at number of orders sent, kind of daily customers, that's right.
Yeah, I remembered Ash from the Ethereum Foundation, who happens to be here. So I hope I'm not misquoting you, but he said that think of Ethereum as like this very secure thing, but the L2s are like the interstate highways that let you go really fast and have a lot of speed. Could you explain what it means to be an L2?
Yeah, yeah. I think that's certainly a very good analogy. Another analogy I would use is kind of going back to TradFi, right? Like in TradFi, you have kind of the layer of kind of settlement and accounting. Kind of, I remember, like when I was on the trading floor, there were all these like we were doing high frequency trading, like hundreds of thousands of trades a day. But then those are happening quickly, right? But then there were like these actual pieces of paper that had to be printed out after the market closed, right? With like the trades, and I mean, in TradFi, that was like the settlement layer. But I think, but you can still run things like high frequency trading on top of it. I mean, that's in the traditional system. Now in Ethereum, again, it's like you have this really secure and verifiable layer of kind of ultimately what movement of assets and kind of what actually which assets changed hands and how they settle. But then you can do hundreds of millions of trades a day, right? Because the way we build lighters, the L2, is that everything that happens, there's a proof that's posted on top of Ethereum that every single order, every single trade was done correctly, right? And so as long as Ethereum has a record of that kind of makes sure that the execution layer and the settlement layer can't be in disagreement with each other.
Great. Okay. So let's get into the technology and roadmap. I know you and I have had multiple conversations about this, both real-world assets, tokenized stocks and other things, and even working with some non-crypto exchanges. So, how do you think about tokenizing revenue streams, especially prediction markets and maybe options beyond, and things beyond perpetuals?
Right. Well, that's really interesting, right? Because I think like one of the I think big unlocks from companies like BitMine, right, and is kind of this idea that you can actually give access to this digital economy to more traditional investors, right? And you can kind of go that can work both ways as well, right? So like you can actually have something like a tokenized stock where now crypto native traders and investors can own a piece of a company, not in a synthetic way, but kind of in a way that actually mirrors real ownership. And now that there's a question of how does that implement it on the back end and how it's settled, but then the next question is how do you trade it efficiently, right? With low costs, in our case, be zero fees, and so that's where Lighter comes in. But I think to your point about there are all these different ways to bet on the future, right? So there's like, you can have a prediction market. Now that's certainly not something that a traditional institution would likely participate in. But if you can tokenize a revenue stream, then they can, because you can think of that as a security. And then you can have options as well on those, either on the underlying asset or on specific streams. And like imagine that all of these things are kind of playing together where on a decentralized exchange that can tie into these different forms of collateral, like maybe some market makers are able to trade all of these and can hedge the risks on the prediction market with, the tokenized revenue streams and so on. Maybe others can only buy and hold the tokenized revenue streams, right? But then that makes price discovery and liquidity much better. And I think that's kind of the future we're building towards.
Yeah. Great. And Vlad, I mean, I know you and I had some extended discussions, and we're seeking to really actualize these with you guys. But you know, can you talk about, you know, like what you see as what could be unique about it, like a tokenized stock, for instance? You know, and I know you're talking about crypto folks could have real ownership of it, but do you see a way to create synthetic exposures, you know, again, using all of this architecture and a lot of technical lift and providing the liquidity, but, you know, could you talk about some of the ways you can create synthetic exposures?
Right, so I think that's what makes it really interesting to have this kind of infrastructure that we're building, right? Because you can actually have the spot asset, you know, the cash equity and perpetuals, you know, share collateral, right? And therefore, it's capital efficient for market makers. Like, let's say that somebody does just want to own, you know, something like a perpetual on a market index, right? And that is a synthetic instrument, but there's going to be a lot more liquidity for that synthetic instrument if participants who are able to trade the underlying through tokenized stock are able to do that kind of on the same, you know, essentially, if all of that happens on top of Ethereum, you can really unify that collateral, right? And so then that's much more capital efficient because then whoever is providing liquidity can kind of hedge the risks.
Yeah.
You know, kind of you can do kind of the so-called basis trade, right, directly on chain.
Yeah, and if you could unpack that a little bit, like imagine if instead of having a blockchain in your project, but you went back in time to your seat at Citadel and you're working with brokers, what is the difference in complexity of trying to accomplish that same thing on a traditional Wall Street framework versus doing it on Ethereum?
Right. Well, I think like one key difference, right, is the democratization of it, where, you know, if you're one of, you know, 5 biggest hedge funds in the world and you've had relationships with, you know, folks like JP Morgan and Goldman for years, you have these lines of credit across different asset classes, you know, I mean, even then, like if you're on the futures desk or you're on the equities desk, you may, you know, it's non-trivial to just share collateral, but, you know, if you're one of the top 5 hedge funds in the world, you can probably get that done and it'll work. But, you know, the beautiful thing about all this happening on top of Ethereum is anyone can do that, right? It's not just like it all happens through smart contracts and, you know, zero knowledge proofs and all those good things. So that, I think, to me, like that's the really exciting part about it.
Yeah, and I mean, I think to me that's a big deal because that means that DeFi projects and products are giving you access to things that only an elite group of hedge funds could actually trade and make all their alpha from. Right?
Exactly, exactly.
So could you, look, I don't know how if you feel comfortable, but are you working with any traditional exchanges, traditional Wall Street firms, to try to do things with everything you've just described?
So, you know, we are, I don't think they would think of themselves as traditional, but they have been around for some time now. You know, Robinhood is a strategic partner with us as well, and, you know, we'll have some more specific announcements on that in the coming weeks, but we have started, you know, I think it's no secret that they're working on tokenized stocks also on top of Ethereum, and we started a joint project with them. You know, on that we'll have kind of more to say about it in the coming weeks. So that's definitely one. I think, you know, we've also started kind of processes with kind of even, you know, more traditional Wall Street firms, both in terms of kind of trading, figuring out how do you actually trade asset classes that traditionally have been unregulated, right? But now can be, where, for example, you can have some form of on-chain KYC, where let's say like a Citadel, they want to trade these assets, but they only want to trade with counterparts that have been KYC'd. Maybe another trading firm is okay trading with all counterparts. Now, how do you kind of do all of that in the same order book? Now that's, you know, our technology allows you to do that. So I think that there's some really interesting projects that are on that we've started on this year as well.
Right. Now, as an aside, by the way, Lighter's token was airdropped, which means it became available to trade about a month ago. Could you tell us about how it's performed?
Yeah, so the token, actually, the generation event of the token was, it feels like a month. It was actually 2 weeks ago, and initially it was available only on Lighter, and so you could trade the spot natively there. And actually today, you could start trading the lit token on Robinhood, on Coinbase, Bybit, and OKX, and a couple others. And so now that ecosystem has grown. I guess maybe I can talk first a little bit about what the token does in the vision, and then the performance. So kind of the vision here, right, is that, like we were saying, there's kind of the security layer at the bottom. That's Ethereum. That's obviously ETH serves a very important function there. But then where we sit is a layer on top of that, right? Is kind of trading, risk management, financial infrastructure, access to financial products, market data, all those things that exist in TradFi. And in TradFi, they happen either through kind of bespoke deals or, in a way that's not democratized. Now, the lit token can be used, you could, if you can stake it, you can get access to financial products. You could get access to, real-time market data, right? You can get access to new listings faster, better infrastructure, right? Like getting, trading in a way that's not rate limited, right? Like, or better funding rates, something else we're looking at. So there's a lot there. And I think in terms of the performance, yeah, it's been kind of some ups and downs the last couple of weeks, but I think with the way these things go is, like, I guess, one of the things about DeFi is there's a little bit of a double-edged sword where, because it's I think ultimately what we're trying to build is like a vision of democratizing finance. And I think net, that's very much a good thing. The one kind of downside of that, right, is that you get a lot of, like anyone can trade, right, on the platform. So you get a lot of participants that are so-called like wash traders or kind of doing stuff that there's not really value add to the ecosystem, but you can't, because it's DeFi, you can't like kick them out, right? So some of those folks are kind of, you can try to do your best to make sure the airdrop goes to real traders and real institutions, but you can't do that perfectly. So some of those folks are kind of selling now. That process will probably take, another week, and then it'll be kind of constructive from there.
Right. And by the way, if someone is like checking on Robinhood, just what would the ticker be?
The ticker is lit.
Yeah, great. Can you tell us, I know you're not operating in the U.S. yet, but what are you building in the U.S.?
So we're a U.S. company. We've started out as a U.S. company, kind of stayed here and want to innovate here, right? And it's I think like it's been a little bit of a shame that some of the innovation hasn't been happening in the U.S. because like we're talking about something that's at the intersection of finance and technology. I think like both the traditional financial system and technology industry were, mostly innovations that came from the U.S. So it's a bit of a shame that the intersection has been, unfortunately, like outside the U.S. But I think that's finally now starting to change with policymakers really understanding. It's interesting. I spent some time talking to folks on the Hill last month, and some of our advisors warned us, like, when you go in there, they're not really going to understand what's going on. It's like, you probably saw that video where Mark Zuckerberg was in a hearing like years ago, and they were like, how does Facebook make money again? Like, but it actually wasn't like that at all. They actually were like, tell us more about, if you have zero knowledge proofs and you don't keep the data, how exactly does that work? They actually understand this stuff pretty well now. And so we're confident that, there's some iterations happening kind of right this week on some of the legislation, but we're confident that there'll be, smart approaches to regulation that'll be enacted, and then, we would work with CFTC, the SEC to kind of figure out exactly how to bring lighter technology to US customers and institutions.
Right. And we're running out of time here, but I do want to cover this. I mean, do you see DeFi merging with TradFi? And sorry, just to break the acronym, DeFi is really crypto, and TradFi is traditional Wall Street.
Yeah. So that's certainly our vision, right? Like, because the financial system, like, I think some of the, and you know, I think you have to give them credit because they were very early and kind of fighting an uphill battle. But some of the very early crypto people, I feel like, kind of had this view, like, okay, like finance, we should just start over. You know, it doesn't work. Traditional system doesn't work. You have to start over, right? Or this view of like, oh, you have to like rebuild it. Maybe some aspects of it work, but you have to rebuild it all from scratch. My view is that it'll be more of a merge in the sense that, you know, certainly like DeFi platforms can, on one side, right, like DeFi platforms can do things like, okay, like you can actually do, if an institution needs on-chain KYC, you know, you can do that, right, and yet still maintain access to the pure DeFi customer. Or if you want to, you know, if there's the idea to run like an on-chain hedge fund, you can do that. But conversely, you can go the other way, right? Like if, let's say, traditional exchange, like New York Stock Exchange, if they want to verify that what they do, all their orders are verifiable, or they want to make sure that the market data that they send to their customers, you know, goes through kind of a trusted Oracle network. Again, a lot of these things happen on top of Ethereum, right? But like you can kind of go both ways, and I don't think anyone knows exactly what that end state looks like, but definitely, I think as we see now with traditional players starting to understand the technology, like it'll be somewhere in the middle.
Right. Well, that was a great conversation, Vlad. So, you know, if you want to follow up, Vlad's going to be here. I think the lit token's very lit.
Thank you, Tom.
Thank you. Yeah. So, Vlad, we might.
Oh, okay.
Yeah. Yeah. So it looks like there's a couple questions here.
I think they gave me the mic. So, Tom, you invited some elementary questions, and I'm going to, with both of you guys, I can't pass this up asking this question. And so, as I talk about crypto with friends and talk with everybody that I come in contact with, I cannot elaborate and explain this. So, my question is about how the value flows to the token that we all hold through BitMine and you know, through ETFs and, you know, as we hold our own tokens. So my question is, I understand, Vlad, with the level 2, as you face the customer, value can flow to you as you satisfy customer needs. I understand in Bitcoin, digital gold scarcity will increase the value. It's with Ethereum from having utility on how the value flows to the token that we hold. And so would love to hear, with the two of you on stage, this has been a burning question of mine.
Do you want to take a stab first? Or?
Sure, I'll take a stab and then you'll give the real answer, right? But I think I think the way I think about it is pretty simple. Like Ethereum is kind of the infrastructure layer, right? The security layer. It's like you can think of it as, again, if you look at the traditional system, like, you know, for the internet, like a Cisco, right? Or for, you know, cloud computing, like Amazon, AWS, something like that, right? So now there are applications on top of those layers, whether it's internet applications or, you know, financial applications, but there's still a lot of value accrued to the infrastructure. Like we pay a lot of gas fees to Ethereum every day. I mean, and yeah, it's true, like gas fees are coming down, but that also means, you know, like if you think about it in terms of supply and demand, right, that also means there are a lot more applications being built. And so there's actually kind of the net of it is positive. And so I think, like, if you look at traditional economy, like it's not like all the value accrues to the user-facing applications and not to the infrastructure. In some cases, it's even split in some cases, it's the other way around. So I just think there's a lot of value to be had in having the right base layer to build on is really important.
Yeah, and I'm going to add to it. So I've been covering markets, equities, and now crypto, but equities for over 35 years. And of course, because I started when I was 2 years old. And then crypto for almost 10, okay? And I want to tell you that I meet a lot of people that are from top business schools, like HBS, and they build great models. And for instance, like let's say they build a model for one of the cellular companies I used to cover, including Alamosa Holdings, which David Sharbut is the founder of. And they do this and they go, Tom, this is the DCF. The stock is worth $5. And not a penny more, not a penny less, okay? And then I'll be like, oh, so you have a 10-year model. You have a discounted discount rate. You have a terminal multiple. You have assumptions for the growth of the business, the revenue per user, the customer acquisition cost, the depreciation or capital charge, interest rate assumption, tax rate. And like, so what's your confidence that you got all those 15 variables correct for each quarter for the next 10 years? And the guy's like, hey, I'm HBS. What are you talking about? But I'd be like, and then I've looked at it. Then why do stock prices do this when there's this model that like people only update like every 3 months, right? I think most people are really anchored to the view that they believe there's a tangible way to price an asset, and they get really stuck and then they miss everything. I'll give you an example. Gold. Gold's been amazing. Look at it, it's up 9% this year. So from the start of the year to now, it's worth 9% more. Did gold's usefulness go up by 9% in 15 days? Did gold sales go up? Do you know if you do a price to sales for gold, like the sale of gold and jewelry or for industrial use, it's like 120 to 1. You're paying like 120 price sales by gold. You tell that to a gold bug, they don't care. They're just buying gold, right? Okay, well, how about land? I mean, the biggest source of wealth in America is land ownership, okay? People have made money from land. I would like you to take a microscope and look at your land that you paid $5 million for, and if you look at it, there's worms and dirt. Why is it worth $8 million? It's because of where it is, right? Like, why is a square inch of Manhattan so expensive? It doesn't pay you anything. In fact, you have to pay taxes on it. Guess what? Why would someone tell me Ethereum's not worth anything if every real world asset's going to be built on it and all the L2s run on it and Wall Street builds most of their tokenized products? And I've literally had the same HBS be like, Tom, show me the revenue model. You know, Ethereum. And then they'll be like, look, I have my 10-year DCF of Ethereum. I can't get those things there without assumptions. I'm going to say in my 35 years, I've never found those people make a lot of money buying stocks because they are anchored to their own reality. I think the reason Ethereum's going to go up is the same reason gold trades at 120 price to value. If Ethereum is literally the single blockchain where most of Wall Street builds, it's n equals 1. It's like the Palantir of stocks. It's like the Elon Musk. If, you know, and if the next L1 has like 1/100th the volume, should they have the same economic model and you just apply the same multiple? I mean, it becomes, you can see like it doesn't make sense. By the way, I don't really know what Ethereum's model is 10 years from now. Nobody does. And so that's why I question why people are so sure they know what the price of it is today. I'm not trying to give you a non-answer, but I'm showing you that everyone's convinced that there is an answer to model, and I personally never seen anyone's model really work. Yeah.
Thanks very much. This is kind of a question relating to what Ethereum's model is in 10 years from now. Some people have concerns about crypto as a whole in relationship to developments with quantum computing, and quantum computing possibly being able to break blockchain encryption. So I think my first question is for you, Vlad, just any insights on that possibility and on that speculation. And my second question is for you, Tom, if BitMine is holding any strategy in that regard. Thanks.
Great. So I think that's an important question. I think kind of the cryptographic compute that you want to use needs to be like way ahead of what's possible to break. And but I think the Ethereum Foundation has started taking this very seriously already, and there's kind of there's kind of a plan to be way ahead by kind of decades. I think it's not an imminent. Quantum computing is moving forward. It's not. I think it'll still be 5-10 plus years before anything like that becomes more of a reality. But I think the Ethereum Foundation has done a really good job of like staying ahead of it. So that's to be honest, that's like one of the, because of things like that, that's one of the reasons why like we want to build on top of Ethereum, is because unlike other folks who are kind of maybe more focused on kind of day-to-day trends, like the Ethereum community thinks really long term.
Yeah, and what I might want to add is, and there's been a lot of conversations about this, if quantum threats develop, Ethereum is able to push new upgrades to either make quantum resistance or to really improve the security. And when people think about the risk of quantum, many crypto experts are really talking about legacy Bitcoin wallets that haven't been upgraded, because Bitcoin can develop quantum resistance, but the wallets have to be upgraded. And as you know, there's a lot of legacy wallets like Satoshi's Bitcoins. It's about I think it's about a third of all the Bitcoins are on wallets that haven't been upgraded. So imagine if you're a quantum hacker whose sole goal is to steal something, then there's a huge bounty because you can do it on an old Bitcoin wallet. So that's, and remember when they unlock that, they have access to the entire history. So that's probably why more people are concerned about Bitcoin and quantum than Ethereum. Now, as BitMine, what can we do about it? I mean, look, at the end of the day, BitMine can take proactive steps because we're a company, right? We're not a DeFi project, so we can invest. We can buy quantum protection. We could buy quantum stocks. We could seed quantum if we thought it would help Ethereum. So there's a lot of steps we can take. I think that's all the questions we can take.
Thank you. Thank you so much, Tom and Vlad. I have a question for each one of you. First for Vlad, I'd like to know a little bit more about Lighter. Can you make an analogy for me as far as whether it's like a Robinhood in being able to trade it? It's a platform for trading, or is it a token that you trade? And then the question for Tom, would you give a breakdown on the revenues that BitMine would make on each of the component? The last component was you mentioned the staking, and we understand that. The other component has to do with Maven, which you had covered elsewhere, but you've not covered it here. I was wondering if you could state whether that is going to be significant and what part of percentage of revenue that it would contribute to BitMine as far as the Maven stake service itself.
Sure. So, yeah, I think the short answer to your question about Lighter is, it's all of the above. I mean, we do have our native token. We have trading infrastructure, and there's a front end to trade directly. Of course, other front ends can and have build on top of Lighter as well. But I guess maybe the question is like, how does all this fit together, and what's an analogy to it in the traditional world? I mean, I think one way to think about it is like, imagine that, you know, when, let's say like Robinhood was first built, or, you know, Citadel Securities, or you know, any of these kind of key components like that, the early participants actually all had a stake in that ecosystem, and could, you know, that stake made everyone's incentives align. So it's like, you know, it's some components of what would exist in a traditional system that are interconnected through smart contracts and zero knowledge proofs, but importantly through the token, there's kind of aligned incentives. So everyone, you know, who's early, it's like, if you were one of the early traders and really helped build the ecosystem, that way you're going to have that incentive, and then now there's a variety of ways that those will be useful to you. So I think it is kind of all of the above, and the token is kind of the link between all the different pieces.
Right, and with regarding to the breakdown of our 4 pillars, you know, if we give you that, we're giving you forward guidance. So that's why we kind of had to present it to you this way, which is just to give you guys an idea, and you can track us as the year progresses. But just keep that in mind. We've given you the framework. So Marcy's going to come on stage, I think, and just give you a breakdown of the rest of the afternoon.
All, and thank you to everyone in the BitMine family who joined us for our X stream. We have to thank our chairman, Tom Lee. Thank you, Vlad.
And we got some feastables here.
We're very excited. If you join us next door, we have a lot of fun chocolate fountains. We have sliders. We have DJ. We have great hats that you can add patches on. We have something great. MrBeast couldn't be here with us today, but he sends his happiness that we are on board as an investor, and his chocolate and his drinks. And thank you. Join us across the hall. And again, thank you so much for your patience. Thank you for being a part of it. And we look forward to seeing you at the next annual shareholders meeting of BitMine.
Yeah, thank you.